Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, December 18th, 8:46 a.m. Folks, we have 2 weeks left of December, and then we end out 2024, which is pretty incredible. But we are here today, and today is going to be a very big day. I'll be streaming a lot today. We'll do The Market Open. We'll end it probably around 11 a.m. And then about 3 hours later, I'll be live for Powell at 2:25. We're going to get a Fed FOMC decision today. This decision is going to be very, very important. This decision is going to decide the trajectory of the rest of December. It has been a very good December, and it would really suck if Powell does anything to mess up this December. I don't think he's going to do anything. I don't think he's going to want to do anything. The market interpretation might be, though, that he's doing something that's a little bit more hawkish than dovish. And that might end up hurting some parts of the market for the end of December. Or we might get a pump. I think there's a lot of different scenarios in terms of what's going to happen. We're going to talk about it today. So far, the pre-markets are priced right now to be defensive. Right now, you got a lot of stocks that are down in the pre-markets. Some of the indices are up, but some stocks are down. And primarily the reason they're down is because they're afraid of what Powell is going to do. They're not sure exactly what he's going to say. So throughout the show, we're going to be analyzing the different potential probabilities and possibilities of what could happen with Powell. And as long as the meeting goes well, we've got nothing left for the rest of the year. There's no like crazy macro data surprises or meetings or anything like that. And we should be okay. And we should have the broader markets hopefully rally and do well. On top of that, we got Palantir news. 2 new deals with Palantir. One is definitely one that I didn't expect. Another one is one that I did expect from the Army. So we'll talk about Palantir. Tesla got upgraded again to $480 by Bard. It's really funny that these firms continue to upgrade Tesla as Tesla stock goes up, seemingly and randomly, coincidentally, to the same price that Tesla is right now in this 480 range. So we got that upgrade to talk about. And then we have a ton of macro data that we should talk about as well, because we did get mortgage rates that came out this morning that were a little higher than expected. So we'll be going through that. All right, folks, so let's get started. Let's do this because we haven't done this in over 2 weeks. Where are you watching from? Put it in the chat. What country, what city, what town, what location are you watching from on the show? We will read out some of the places you are in over the next 2 minutes, and then we will get started for the day. Thank you, everybody, for being here. Hopefully, everyone's having a good day. Wednesday, middle of the week. We got 2 days left. And then after that, a couple days till Christmas, and then we are done pretty much for the year. All right, what do we got? We got Sanjay from Singapore in the house, baby. We got Jan from Netherlands. We got Chamu from Tampa. We got Vin from California. Laura from Sunnyvale, California. I love it. California is a special place in my heart. I've been to California so many times. I don't think I would ever want to live there, but I've been to California so many times, especially the Bay Area. So definitely love California. We got Canada, north of Toronto. I love it. Malaysia, Israel, Poland, Georgia, Boston, Mexico, Houston, Long Island, Houston, Texas, baby, Louisville, Kentucky. I love Kentucky as well. Dude, it's so crazy when I see you guys from all these different parts of the world. Like, it's really incredible just to see everyone from across the world being here all at once. It's like, it's just awesome to see. We got Spain, we got Toronto, Ontario, Ireland. I'm not going to do the joke. Not going to do it. Don't worry. I've matured. I'm not going to do it. The OGs know what joke I'm going to do. I'm not going to do it. I moved on, even though I did make a good joke on the market close yesterday. I'm not going to repeat the joke because I repeated it 5 times already last night to remind people I made the joke. I'm not going to do it. But if I was in Ireland, I would make sure my money was doubling. You know what I'm talking about? You know, that's what I'll be doing. If I go to Ireland, that's what I'm doing. We got George in the house, Bangkok, Finland. I love it. Thank you, everybody, for being here today. Portugal, Oklahoma, Soviet Union. Okay, I don't know how they're letting you watch the stream, but still, thank you for being here. Poland, Brooklyn. I love it. Okay, so let's start off with this before we get into everything. Chad, good morning. Chad, I hope you came just before I made my joke, because hopefully you'll appreciate it. Shout out to Chad. Chad, thank you for being here. Okay, before we get started, and speaking of Chad, this was really funny last night. I was on a Twitter Spaces last night with Martin Shkreli. Now, how did I get there? I don't know. And as I was on the thing last night, and then Chad pops in like 3 minutes later, and he texts me. He's like, "How is this happening? Why is this happening?" And I was like, "Dude, I have no clue, but here I am, and it's happening." Martin Shkreli starts this Spaces, right? And he's like, short Bitcoin, short MicroStrategy, short everything. And And then I just joined just randomly. Like I finished my recap for the day. I was actually ready to go to sleep, bro. It was like 10 p.m. I wanted to go to sleep. I was like, let me get some early sleep. I ended up going to sleep at 1 a.m. because the space was like 2 hours. And then so I join and then I just request to speak. And in my head, I'm like, maybe they'll let me up, maybe they won't let me up, but it's just going to depend on them. And then like my mic turns on and I'm like, oh shit, I can speak. I can actually say something. For those that don't know who Martin Shkreli is, I'm sure a lot of you guys know him, but famous biotech entrepreneur, went to jail because he raised his prices on his drugs. And then he came out. He's a pretty smart guy, in my opinion. Very, very smart guy in terms of how he thinks from first principles. A lot of people respect him. But when he says go long or short something, he called the Sava short like a day before Sava collapsed 95%. So he made a lot of money on that. So he's a smart guy. So we're in the spaces and the mic opens up to me and he's like, anyone have any questions? And then so I ask him, what do you think about MicroStrategy's kind of premium compared to Saylor's argument that Microsoft is, trading in 34 times earnings? And that's like a ridiculous expectation that we just accept in the market. Like, oh, a company should trade at 30 times earnings, whereas MicroStrategy trades at 2 times its Bitcoin premium. How do you compare those two? And then he gives me an answer. He doesn't like the sort of premium that MicroStrategy has. He thinks Microsoft has real products and services, yada, yada. This is sort of same basic answer. And then he dissects that. Then this Bitcoin MicroStrategy maxi guy hops on stage. His name is Mike Alfred, and he starts arguing and he gets aggressive. And he's like, Martin, you're going to get the shit kicked out of you. You're going to ruin this. You're too early to the short. You're going to get messed up. You're not going to win, yada, yada. And then Martin starts fighting back. And Martin's like, who the heck are you? I've been trading for 30 years. Like, who do you think you are? You can't just come up on my stage and like start insulting me. And I'm in the middle of mom and dad fighting aggressively. And it was just the most hilarious thing ever. And I'm getting texts from my friends like, why are you in the middle of this shouting match between these two guys? And I'm like, I don't know, but I'm here. And then I tried to moderate it. I was like, well, guys, if we assume that Bitcoin's going to double and Michael Saylor gets a 0% coupon rate, like interest-free convertible note, isn't it the dumbest thing to not take the money? And then Martin respectfully is like, yeah, but I still think he's levered up. And then this Mike guy is like, Martin, you're a piece of shit. You're a dumbass. You have no idea what you're talking about. And it's just back and forth. And it's hilarious. It is literally hilarious in terms of how this is playing out. So that's how my night went. And then I ended up staying on the stream for the next 3 hours because there was like 3,000 people there and they didn't take away my mic. So then I just kept asking more questions. I was like, hey, Martin, what do you think about Palantir? What do you think about Tesla? What do you think about NVIDIA? So a couple takeaways from this, and then we'll get into the Palantir news. In terms of NVIDIA, he thinks NVIDIA is going to be a $10 trillion company. So he's very excited for NVIDIA. He's bullish Apple. He thinks Apple eventually will figure out what they're doing, and they kind of think first before they act. So he thinks eventually they'll figure out what they're doing with AI. Tesla, he thinks can 10x from here. So he's bullish on Tesla. When I asked about Palantir, he's buying Palantir. But the reason he's buying Palantir is because he says he's short so much stuff that he has to go long some stuff. So in my head, that still means that you think Palantir can go up, right? Which is why you're going long Palantir, even at these valuations. So that was kind of interesting to see how he's thinking about that. Number two, he thinks it's an incredibly well-run company, and he loves the company, loves the leadership of the company, thinks the company has massive potential. The one thing he did say, though, and it wasn't really a diss, but he was like, I don't think they're an AI company per se. And when I heard him say that, it's more so he described they're not building foundation models, which is true. Palantir is not building an LLM. And quite frankly, it'd be stupid if they did build an LLM. So from that perspective, I guess he thought of AI because he's in the private VC startup world. He's not thinking of it as like operational workflows for an enterprise. He's thinking of it as like, what are the foundation models that are going to be big in the next 5 years? But it wasn't, said in a way that was bearish. It was more so they're a big data company. They do a lot of applied work with enterprises. They're not necessarily an AI company. I disagree. I think they are one of the best AI companies. I think the market also perceives them as an AI company, but they're not a foundational AI company in terms of like building the LLMs, right? They're actually using those LLMs. So it was pretty cool. And the fact that I got to ask him that question, I thought was pretty awesome as well. So sometimes you hop on a Twitter Spaces, you request for the mic, and you might get chosen. And the funniest thing though was for the first 20 minutes, like these two guys are duking it out because they're so angry at each other about MicroStrategy and Bitcoin. And then I'm just in the middle of this, like kind of laughing as my mic turns off. Like, what did I start? But it was pretty cool to see that happen. I'll try to get the clip of it later in the show because I have the clip pulled up. We'll listen to the audio of it towards the end of the show. And you guys will kind of see how that went down. All right, Palantir, let's get started. Palantir partners with Pray.com. That's the first partnership we have today. Pray launched 9 months worth of new product features in a few months and reduced content translation from days to minutes, multiplied over thousands of hours of podcasts. I love this partnership because Pray.com is not BP. They're not Airbus. They're not some big hospital. They're a simple app that allows you to read religious texts. That's it. And the fact that they're able to partner with Palantir to me is just one of those like realistic use cases of what AIP is being used for and why it can be special. Prayer.com CEO says, prayer existed 10,000 years ago and prayer will exist 10,000 years from now. Thanks to Palantir, prayer can operate and defend religious liberty on a global scale. I love it. I love this partnership. It's probably not going to bring in hundreds of millions of dollars, but what it is going to bring in is a simple use case that more applications can see and get value from as well. Here's a little bit more from the press release. Early on, Pray.com recognized the challenges of translating its content into multiple languages, especially when it came to the cost of staffing and idioms. Pray.com sought software to automate the manual and costly process with a system built and tested for scale. Using Palantir's ontology software development kit, OSDK, Pray.com has finally been able to process transcripts and translations for content at the quality of native language of speakers. Pretty cool. Not bad at all. Also, they said AIP processes Pray.com's audio and video transcripts and incorporates translations at the quality of native language speakers. As a result of its relationship with Palantir, Pray.com launched 9 months worth of new product features in a few months and reduced content translation time from days to minutes. Good partnership. I think it's strong. And ultimately, it's one of those partnerships that shows that other companies that are not like the biggest companies in the world can still work with Palantir. Another deal that we got yesterday, and the Pray.com thing was not expected. I woke up this morning and I was pleasantly surprised to see that we got a partnership with a relatively smaller company that's still important. This one I was not surprised with. Palantir got a $1 million extension. Sorry, not 1 million, 1 year, $119 million extension for the Army Vantage contract. Now, there was a little bit of confusion last night on this contract, and from the best of my ability to confirm what's going on, this is not a 4-year, $400 million contract. This is a 1-year extension. I mean, it literally says right there, Army Vantage will have a 12-month period of performance with an additional 5-6 month options. So essentially making the argument here that you have 1 year of 119 million. If you look at the actual category ID for the Army Vantage contract, and it gets a little bit deeper, but it's the exact same ID that the government uses to identify this contract from 2018. So this is an ongoing contract that Palantir got 6 years ago, and this is an extension of that contract, which is still really good, right? So it's not like a brand new 4 years. Eventually, when these 4 years run out, Palantir will probably get another 4 years, because if the Army's been using Army Vantage, which is a data platform for the Army, over the past 6 years, they're probably going to keep using them for the next 10 years. But 1 year, 119 million, not bad in the context of Palantir. What's also really special about this, a lot of people forget the value of Army Vantage. We got a press release back in December of 2023 in terms of why that partnership was so important. And reading from the press release, since its inception, Army Vantage has enabled the Army to recoup savings on over 700 million in additional de-obligated funds per year, amounting to nearly 4 billion. So the Army paying Palantir a max contract value of 600 million to save 4 billion. That is not a bad deal. And that's why Palantir continues to get this momentum. GoCarp. Yes, shout out to GoCarp in the chat. If you did not follow GoCarp, let me put his Twitter right here. GoCarp is the one who actually clarified this to me and made a better, gave me better clarity on kind of what's going on with this contract. By the way, GoCarp, for those that don't know him, he is a OG of the Palantir community. He has 7,792. We got to get him to 10,000 followers. He does a lot of work for this community to be able to figure out the value of these deals. Let me put his Twitter right here in the chat. Please make sure to follow him to be updated on all things Palantir, patents, government news, etc. But if you go through his Twitter last night and we were talking, this is the spreadsheet right here, and he's probably going to post more details on this. This is what kind of clarifies to him and the community that this is a 1-year deal, not a 4-year deal. And this is pretty exciting. So this is pretty exciting. And one more deal for Palantir, 119 million. Chad says, Amit, we should do this for your content. Let's build it. Well, speaking of Chad, tomorrow, folks, we're going to have a very special episode of the Market Open after the open, which will end at like 11 a.m. Or 11:30. Chad and a Palantir engineer are going to come on the show. So for anyone who has ever been interested in actually seeing an ontology being built live along with AIP kind of showing use cases on top of that ontology, that is happening tomorrow, 11:30 a.m. live. So it'll be right part of the Market Open. So you can just stay on the Market Open stream. Chad and Unkit, who is one of the engineers that I showed a video of at Palantir's pre-event that I posted on Twitter, kind of showing the demos of an ontology. They are making a content calendar for me by using all my content. It's going to be pretty cool, dude. It's going to be pretty cool. So they're downloading all my content off YouTube, and then they're ontologizing it, essentially ontologizing Amit. And then they're going to be building content creator, because that's who I am, use cases using an ontology and AIP. I think it'll be really freaking cool because it's going to be one of the most realistic examples of like how you can start building with AIP immediately. They're going to do it in front of you guys for 2 hours. So it's not like they're going to come pre-built with something. They're going to literally start from scratch on the stream. And anyone who has never been able to see the Palantir events or the Palantir demos or like actual Palantir engineers building something, you're going to get 2 Palantir engineers together on stage building something for me when it comes to content creators. So it'll be really cool. It'll be really, really freaking cool. That'll be tomorrow, 11:30 a.m. And Chad will be on, Unkit will be on, and I think that'll be really fun for everyone to see. Yeah, everyone's saying that's badass right now. As soon as they came to me with the idea, I was like, this is really badass. Because I'll get some firsthand experience of seeing like how they build an ontology in AIP. And the thing is, the goal of the demo is to make it simple enough for anyone to sign up. You can sign up immediately with AIP for builders, and you can start building. And so I think if we kind of give an example to the community of something that's not as scary, something as simple as like taking my content, ontologizing it, and bringing use cases on top of it, then I think a lot of people will be hopefully more inspired to build other products on top of AIP. So that will be happening tomorrow, 11:30 a.m. Will be exciting. Elaton says, nice to admit you're going to get Palantirized. Yes, Palantirized, ontologized, all that good stuff. And again, please make sure to follow GoCarp. I cannot stress enough how much of a resource he is to this community at actually finding these deals and clarifying all this stuff. Here's his Twitter right there in the chat. You can check him out right there, and you can follow him. Chad says, I can't wait for you to build anymore. Yeah, look, Chad's been asking me to build on AIP for a while. Dude, like, I'm not a software engineer. I'm a content creator, and I should be, like, opening up AIP and, like, navigating it. But, like, I actually am busy throughout the day, and that's not a good excuse, quite frankly, because it's been 3 months. So Chad's like, you know what? Screw it. We're actually going to just show you live on stream how to do this thing. And, that's how it's going to get done. So that'll be happening tomorrow. Super cool. GoCarp right there. The spreadsheet on the 1-year deal for Army Vantage is on his page as well. And then while we're here, let's shout out Chad as well. Chad's at 8,162. For those that don't know Chad, he is like the single biggest thing to happen to Palantir in my life this year. He, really set up everything, got me to AIPCon, just forever grateful to him. And if you care about Palantir, please make sure you follow Chad as well. All right, so that's all the news in the context of Palantir this morning. In terms of the stock, look, the stock has been kind of just flat this whole week. I even feel bad saying like the stock's struggling because it's not. It's up 400%. Like it's not struggling, but it's down 0.5%. It's kind of been flat all week. Could it go flat till the end of the year? Yeah, I could see that. I also could see the NASDAQ rebalance happening on December 23rd, not December 20th, December 23rd, creating a ton of inflows into Palantir, which could also get it to potentially go higher. But in general, I think we end out the year at least above 65. What it looks like is probably above 70. The resilience that's been showing above 70 is amazing. Now, J-Powell could screw us up today. That's possible, and we'll talk about J-Powell in a second. But as long as J-Powell doesn't screw it up, then I think we are going to be okay. Does this mean Amit will finally be logging into AIP? Yes, correct. I'll be logging into AIP. Adam says, Chad, I'm still building. We're all trying to figure out how to build, but I think this will be a good example for everyone tomorrow as well. The contract came out before Pilly was public. Yeah, that's another thing. Adam's been tracking this Army Vantage thing for a long time because Palantir went public in 2020. We got the Army Vantage in 2018. So, this contract has been around for 6 years at this point, well before Palantir went public. And there's been a lot of records in terms of how this contract works for Palantir. All right, so that is the main coverage on Palantir, and we will see kind of what J-Powell says and how that impacts Palantir later today. Let's talk about J-Powell. So we've got a macroeconomic event coming up today, which is the FOMC meeting. The FOMC meeting is going to be very, very important, and it is going to be something that determines the, honestly, trajectory of the rest of the year. Here's a couple things that are scaring me a little bit about this FOMC meeting. Here's the first most obvious thing, and I don't know if you guys have been keeping a track on this, but this is like very, like, it's happening. Look at the freaking 10-year, dude. We're at 4.4. We were at 4.1 Monday last week. We're at 4.4. So the fact that the bond market is screaming that they fundamentally do not believe in what has been happening in terms of like the inflation reading going down, that is a problem. And why is that a problem? Well, the reason that's a problem is ultimately because if the bond market doesn't believe that inflation's coming down, they're going to sell off bonds. That's going to get the 10-year to go higher. And the other implication that has is that mortgage rates are going to go up if the 10-year goes up. Take a look at the 30-year fixed rate mortgage that just came out this morning. It's at 6.75%. It's the highest it's been in 4 weeks because we were at 6.67%, which is the lowest we've had in 4 weeks last Monday or last Wednesday. And now we're back at 6.75%. So I think the issue that's going on right now in the context of the Fed is Jay Powell is looking at that 10-year and he's like, all right, so the bond market doesn't believe inflation is going down. Even if the Fed believes inflation is coming down, the bond market doesn't believe it. Then he's looking at mortgage rates. Mortgage rates are not coming down, which is a big issue because the housing market cannot stabilize until you have a decent amount of supply, which means the builders need to be incentivized to build. The only way they're incentivized to build houses is if consumers are willing to buy. Consumers aren't willing to buy if rates don't come down to at least 6%. I mean, realistically, people would want 5.5%, but 6% probably gets people interested. People are still buying here. It's not like people aren't buying here. It's just you're not getting an onslaught of demand of people buying because, like, who wants to pay almost 7% mortgage rates? Yes, I know you can refinance all that stuff, but in general, the demand is not necessarily there. And so if people aren't buying and home sellers don't want to sell because then they have to buy at a more expensive mortgage rate, and they don't really have a market to sell to, you've got a lot of issues in regards to the housing market. And that is one of the broader issues that I think the 10-year not only is struggling with, but also Jay Powell is struggling with in terms of what we have for inflation. On top of that, take a look at U.S. housing starts. This data came out this morning as well. Housing starts in the United States unexpectedly declined 1.8% to a seasonally adjusted annualized rate of 1.28 million units in November 2024, the lowest in 4 months compared to 1.3 million in October and forecasts of 1.34 million. So the market wanted 1.34 million. We came in at 1.289 million. Starts for houses with 5 units or more plunged 24% to 264,000, offsetting a 6.4% gain for the single family segment that we saw starts for rising to 1.011 million. That's not good. That's not good at all. So the housing market is struggling right here. The home builders are going to be struggling with it. People who want to refinance their house or buy their house just don't feel like this is the market to get into. And then you put all that together, then you get the market still pricing in a rate cut, which I think we're going to get. We're definitely going to get the rate cut, but there's no way Powell can ignore what he's seeing in the housing market and in the broader inflation readings that we're seeing with CPI, PPI, PCE all being higher than expected. So the market's expecting a 98.8% probability, but based on the data I just showed, the market's also expecting Powell to come out and basically be a hawk and say, look, you're going to get a rate cut right now, but you wanted 5 next year. You're only getting 3 next year. And if that's the case, and you're only getting 3 versus 5, the question is, here's the fundamental question for everyone's portfolio today. Are the stocks you're invested in built out or built on the premise of 5 rate cuts next year? That's the question. Are the companies you're invested in built to handle 5 rate cuts or less than 5 rate cuts next year? So for example, one that I'll throw out there, IWM, small caps, they need rate cuts. If you're like heavy IWM, 80, 90% of your portfolio is small caps, IWM, and you're not selective small caps where you can figure out, okay, this company, Abercrombie, is going to be better than the general Russell. But if you're just straight up in the Russell or TNA and we don't get the amount of rate cuts that are expected, that doesn't mean small caps are going to do horrible next year, but it does mean in the short term, there could be some volatility because the market perception is going to be, well, wait a second. Why are we buying small caps? IWM is up right now in the pre-market. So, market's saying it's okay right now. But IWM has underperformed the S&P over the past week. I mean, IWM at 242 after Trump got elected, and since then it's just completely underperformed. S&P hit 570, and then S&P hit 6,000. So we saw a gradual move upwards after Trump got elected. IWM declined. And so these are the things we have to think about. Same thing with Robinhood, right? I'm heavy in Robinhood. I don't know if Robinhood's going to be great next year if we don't get as many rate cuts. Like I have a feeling they'll be okay because there's a lot of other parts of the business, but there might be a perception out there that says, wait, Robinhood might not be the best. Palantir, I think Palantir is kind of detached from the rate market, but overall it's a growth stock with a healthy multiple. And if you don't get rates coming down, the premium that you give to a growth stock with a very high multiple generally decreases, right? If you don't have lower rates, if you have higher rates. Now, granted, the opposite is if we have higher rates, Palantir's net interest income should still be higher because they have like $5 billion in T-bills right now that they're collecting. But there could be some nuance in terms of how the street analyzes it. NVIDIA, it's recovering right now in the pre-market up 2.5%. Is NVIDIA built to weather the storm with lower rate cuts? I think yes, because NVIDIA's demand doesn't depend on rate cuts. But nonetheless, the market today is going to have to make a decision after Jay Powell speaks and then determine how they want to allocate capital to a lot of these stocks. Bitcoin, right? How many cuts does Bitcoin need? I don't know. I don't know how many cuts Bitcoin needs. Bitcoin went down to 104 from 108 yesterday. I have no idea. I feel like Bitcoin just needs people to keep believing in Bitcoin. And as long as that doesn't stop, then that's good. You know, the easiest way for people to not believe in Bitcoin is if their portfolios go to shit. I mean, if your portfolio takes a nasty dip, you start thinking, do I really need this Bitcoin thing? Probably not. And that just happens in general, right? Like when you're consolidating your portfolio and everything starts falling, unless you have like a $10,000 average on Bitcoin, if you bought in at 94,000, you're probably not keeping that Bitcoin, right? You're probably trying to save your money, keep it safe. Because the first thing to like really go down is growth stocks and speculative assets like a Bitcoin. By the way, I don't feel pleasure reporting this right now, but you know, we've been talking about froth in the market. And I've been saying this is not 2021 because in 2021, a picture of a rock would get $3 million. While in 2024, a fart coin is worth $1 billion. And it's really hard to keep saying that this is not 2021 when you see some stuff like this. Now, granted, I'm still believing that this is not 2021 because earnings growth is good. But if there's enough money to give fart coin $1 billion of valuation, it's a bit annoying, right? It's a bit annoying. Now, granted, I don't think that takes away anything from Microsoft, Nvidia, Amazon, Palantir, Robinhood, all the execution they're doing. I just think there's a little bit of froth, and that froth needs to get flushed out because, like, you cannot have Fartcoin being worth $1 billion and expecting this to be a healthy market. And so, I don't know. We're gonna have to see kind of how that plays out, what Jay Powell's decision looks like today, and how that implicates things like Fartcoin. Fartcoin is an AI agent, though, but today's gonna be very important to kind of see how that plays out. Tess says crypto will always attract gamblers. Yeah, that's the case. And I think I should readjust my statements. Is there's a lot of froth in the crypto markets. You know, there's a ton. I mean, like in the equity markets, although we're trading at a pretty sizable premium, you can still make the case. Well, look at the earnings, look at the consumer, and then you can put two and two together and say it's worth paying the premium, or it's at least worth not selling off the premium if you've been invested over the past couple of years. But for crypto, I don't know. I don't know how to justify Fartcoin. Cactus Jack, thank you for being a channel member. Appreciate that. Jeffrey Jones, thank you for the $5 super chat. Amit, what are the current summary of economic projections and any forecast changes expected today? The current summary is 4 cuts next year. And if that goes down to 3 or 2, that's going to be an issue. If that stays the same, then I think we'll be okay. One thing I think will happen, and this is the contrarian in me, I think we could pump today. I think Jay Powell could come out. I think he could say, hey, we're getting a rate cut. And then he could be like, yeah, we think inflation's an issue, but we think the labor market's a bigger issue. Therefore, we're going to keep the 4 rate cuts on the table. Now, maybe they rug pull us in 2025 and they take away one of those. But for now, they keep it on the table. They keep the economy good. Jay Powell doesn't piss off Trump because if he lowers the rate cut expectations, Trump's definitely going to get mad. And I don't know. Jay Powell says he's not politically motivated. Maybe I don't know. We'll see. But they're going to keep the dot plot the same way, the summary of economic projections the same way. They're going to keep the cut today because the labor market is what they're going to rely on as something that gives them the authority to cut rates. And that's not the worst idea in the world either. I mean, people need jobs. You cannot have people go unemployed because then you get into a recession. So I think there's an argument that 230 ends up being really bullish, but there's also a big argument that it's a hawkish cut and 230 could be a bit more bearish. And that's what we're going to have to see later today. Chat says new day and a new scam. Yeah, I mean, Dick, I don't know if the people holding Fartcoin are going to, be able to hold this forever. But again, I'm not against meme coins. I think meme coins, I talked about it last week. There's a unique psychology around meme coins. And if you can really develop a community, yada, yada. I just don't know. What's the community around Fartcoin? Like, I don't like, whatever the community is, I guess they're excited to the tune of $1 billion. The question is, can that community grow and mature? And if it doesn't, then, it might not be the best situation for this coin currently right now and currently into the future as well. Okay. It's tough to hold in a fart. That was a good one. That should be how Dog with Hat has the hat stays on and that's their meme. And every time you ask, hey, are you selling? They're like, hat stays on. It's tough to hold in a fart literally should be their tagline. And every time someone says, hey, are you selling? They should be like, it's tough to hold in a fart. That's actually hilarious. All right, let's move on. Speaking of crypto, Robinhood CEO Vlad Tenev says, you know what, Zucks and Bezos, I'm one-upping you guys. We're not giving $1 million to Trump's inaugural fund. We're giving $2 million. Here's what Vlad had to say about Robinhood donating $2 million to Donald Trump.
I haven't been shy about expressing my disappointment and general sense that the current administration and the SEC has been headed in the wrong direction. Rampant regulation by enforcement, open warfare against the cryptocurrency industry in America, as well as taking a very anti-AI posture. And I think that was bad, not just for Robinhood, but for customers, the industry, and for America. And I think I'm proud to support the new initiatives towards more sensible regulation. And again, making sure that the US is where it should be, at the forefront of innovation in financial services, in artificial intelligence, in all emerging growth industries. So yeah, we're big believers of that at Robinhood, and of course, me personally.
$2 million is more than the 1 million Meta, the 1 million Amazon, and the 1 million Sam Altman of OpenAI have donated. How do you arrive at that number?
This was really interesting.
Yeah, I would say when Robinhood does something, we fiction, and I think like the actual amount, the details of that, probably a little bit more art than science. But we think that the U.S. should be a leader in financial industry, and we like a lot of the things that the administration has already put in place. They've got a lot of smart people that are thinking about how to solve what are some incredibly difficult problems. You know, there's progress that needs to be made to make the country more efficient, to streamline bureaucracy, all things that I think are going to be imperative. And we're happy to support that. And also, a lot is being put in place. A lot more will need to be done.
So I thought that answer was very interesting. Couple points of analysis here. Number one, he says on 2 million versus 1 million, it's more art than science. I thought that was a hilarious answer, because essentially what he's saying is, yeah, those guys gave 1 million. We are a smaller company than Amazon and Meta, much smaller. Those are trillion-dollar companies. Robinhood's a $32 billion company. We need to make sure the president knows who the hell we are. And one of the ways to make someone know who you are, right, is to spend a little bit more money on them. So right there, it's like, yeah, you know, they gave 1 million, but we think we're going to get Trump's attention by giving 2 million. And this whole art versus science thing, I thought was a good answer, because he's essentially saying, yeah, we needed to double down and make sure we get our name through the door for Trump to hear who we are. Number two, is Vlad kissing the ring? 1000%. Vlad is kissing the ring. Vlad is absolutely kissing the ring. And as a shareholder, I'm happy that he's kissing the ring. Why? Because the American people voted. This is the guy in office. Your business, aka Robinhood, uniquely benefits off of financial regulation and crypto regulation. It is very important, no matter who's in office, to have a good relationship with the CEO of the country, in this case, Trump, and his administration. And this is just business. You know, we had this conversation last week on the show around conflicts of interest. And some of you guys said, well, you know, this just feels like bribing. This just feels like, you know, American billionaires taking over the system, yada, yada. I'm sympathetic to that. I get that. But there's a good quote by Chamath, even though I'm not the biggest fan of Chamath. I know he's, you know, had a questionable past. But his Stanford interview a couple years ago was very important to me. I watched it when I was a sophomore in college. And he basically said money is power. And if you have an agenda that you want to get out into the world, you want to stop XYZ, you want to stop climate change, you want to get your opinions, usually politically motivated through some type of agenda out in the world, you need capital. You need capital. And that's the number one thing that I think the 3,000 people in this chat understand versus the 99.9% of the world that thinks that, you know, like, you don't need capital. No, you need capital. You need equity, and you need compounding equity over many decades to be able to have any type of real power in the world. Either you have your own business and you have equity in that, or you share in the wealth of other people that are working their asses off to deliver shareholder returns and try to participate from that perspective in equity. So I think Vlad right here is just being honest. And he's saying, look, this administration is probably going to help in a variety of ways to the financial ecosystem, definitely for the crypto ecosystem. Robin is going to put up $400 million of revenue projected. It might be plus or minus 50 million, but we did the math on Robinhood Weekly the other night. If December numbers hold up, and right now December numbers are looking like they're going to be double of November's numbers, Robinhood is going to put up $400 million of crypto. That is a lot of money off of an asset class that needs to be regulated in a particular way so that you don't lose your business. So from that perspective, what Elon's been doing with Trump, spending all this time with him, with Zucks and Sundar are going to visit Trump. At the end of the day, they know Trump's a businessman. They know he can negotiate. They know, you know, Tim Cook knows Trump doesn't really want to put tariffs on iPhones because Apple is a very good company in the United States. They just need to have a conversation. And to do that, you need to be able to negotiate. And that's what I think is happening right now. And as a result, Vlad is the next person to join the ecosystem on figuring this out and doing it as well. So that's what we got in the context of Robinhood. Let's transition now to Tesla. Let's talk about Tesla, and we'll keep going from there. Robinhood December numbers are not coming out. Those are going to come out on earnings, so we only get 2 months. But, you know, if you do some math, you can kind of figure out the third month. So we're not going to get the December numbers, but on earnings, we're likely going to see close to $900 million of revenue for the quarter, which is going to be pretty exciting as well. All right, Tesla. Tesla got upgraded again to $480. It is really funny seeing all these upgrades come in. Tesla's down about 2% right now in the pre-markets. I don't think anyone can be upset about that. Tesla's been up like 20% or 30% over the past week, but they did get upgraded. And the reason they got upgraded is because a lot of these firms are basically starting to realize that they missed the boat in terms of analyzing Tesla, and they're deciding to raise their price targets. So you have this one to 480. Let me just pull it up right here, which matches the 450 to 515 price targets we've seen over the past couple of weeks. So here you go. Tesla to 480 outperform. A regulatory fast track for the cybercap, continued cost reductions, introduction for more affordable models in H1 2025, and Musk's ties to President-elect Trump all increase our confidence in the outlook for 2025. We are tweaking estimates and raising our price target to 480. This is a premium to large cap, high growth peers, which we believe is justified given Tesla's growth prospects and several tailwinds. We are adjusting estimates by lowering our gross profit outlook for 2025, which is partially offset by an increase in regulatory credit sales. We believe these credit sales will be more sustainable than previously assumed, given competitors' challenges ramping production. So we are getting price targets out the wazoo. Morgan Stanley, Wedbush, Mizuho, I mean, just any name, Goldman Sachs, Bank of America, all of these guys are bringing the Tesla price target, the floor on what they think the price target should be, closer to $500. Now, we also got an upgrade yesterday by Gordon Johnson, and the price target for Gordon Johnson went up, substantially in the context of what Gordon Johnson thinks is a good price target. And we got a price target raise from $22 to $24 for Gordon Johnson. So, the fact that we are getting price targets across the board, even from Mr. GLJ Research himself, I guess you could argue is definitely bullish. This is hilarious, bro. Like, I don't understand how he can actually be an equity research analyst and get away with this. There's no way he's not getting paid by people to put this stuff out. Like, no one has integrity and respect for themselves, and they do this. Like, this is just there's just no world in which he thinks this is a legitimate thing. There's no world. Same thing with Rishi. Now, Rishi has not been as bearish as Gordon has been for the time frame. Rishi's been bearish for 3 years. Gordon's been bearish for almost 12 years. So maybe Rishi finally changes next year and he upgrades us to $30, which is not 70, but at least it's not $11. I'm gonna see. I'm gonna wait and see for Rishi. But Rishi looks like he's on the track to be Gordon Johnson, and Gordon Johnson has spent 12 years being bearish for Tesla. And again, you don't do this for your reputation. You don't do this for your brand. There are people that go bearish to build a brand, but those people are in some respects, reasonably bearish, or at least a little bit more reasonable than $24 on Tesla. So, I mean, look, at that point, I do think he's getting paid off by special interests. There's no way you can justify it like that. And whatever the special interests are paying him, it's not working because Tesla's at $468. It would have to collapse more than 85% to get to his price target. I don't see $1 trillion of shareholder value being wiped out. But, he gets to claim that he has the lowest price target on the street. And I guess keep going from there. Ego is definitely a part of it. Ego would definitely be a part of this. So that's what we got in the context of Tesla. No other main updates on Tesla. We talked about Tesla China yesterday. They had their third best week in Q4, which was good. Elon's pretty bullish on Tesla. I mean, he's tweeting a ton about Tesla. Oh, we did have this piece of news yesterday, which resulted in Elon posting this. So let me show this real quick. So Elizabeth Warren, our favorite senator, had a note to issue to Donald Trump yesterday. And she said, let's pull this up right here. She said, she urged former President Trump to establish a conflict of interest rule, specifically addressing Elon Musk, because she wanted Trump to come up with this framework on how he's going to navigate conflicts of interest. The same stuff some of you guys were talking about as well the other day. Trump's team responded with, Warren is a career politician whose societal impact is 1/1024th of Elon Musk. Trump's transition team is adhering to higher ethical guidelines. So basically they were like, lady, you've done literally nothing. You don't get to talk about, conflicts of interest. And then Elon today tweets this about Elizabeth Warren. So, Elon definitely is not a fan. Again, the joke here is that Elizabeth Warren said that she was Native American on her presidential application, one of these applications that was public. And I don't believe she's Native American. I might be wrong on that, but, people thought she was definitely using that to gain some credibility. So Elon also tweeted this as well. So I think those are the biggest updates on Tesla. Stocks going up, price targets are up, Optimus is getting more value, FSD Energy is getting more valued. FSD 13 got rolled out yesterday to a lot of people. And Trump has Elon's back because they're not setting up any conflict of interest rules to appease Elizabeth Warren. Speaking of politicians, here's what Joe Biden had to say yesterday on banning politicians from trading stocks.
You came into the Senate in 1972. People didn't follow stock trades, and you could have, if you wanted to get wealthy. You could have gone in early on Google and Boeing and Microsoft and Nvidia and Amazon. You could have been an early investor. You didn't, correct me if I'm wrong, didn't own any stocks for that whole period of time. When nobody was looking, there was no stock act, nobody was checking you. Why?
Look, for 36 years, I was listed as the poorest man in the Senate. Not a joke. That listing they had? I mean, in the Congress, not the Senate, House and Senate. Yeah. I never thought I was poor. I had a salary that a senator made. But, I don't know how you look your constituents in the eye and know because the job they gave you an inside track to make more money. I think we should be changing the law that we have to, but we abide by at the federal level, that nobody in the Congress should be able to make money in the stock market while they're in the Congress.
So that's what we heard from Biden yesterday. Now, the only thing I would say is weird about it, I agree somewhat with his opinion, and I want to get your guys' perspective on this, but it is weird that it's happening a couple of weeks before he's going to leave office. I mean, if he really cared about this, you would imagine that he would make this an initiative during his tenure. That didn't happen. I mean, he can't do anything in the next 2 weeks. So it's going to be up to the Trump administration to figure out if this happens. Now, here's what he means by people getting wealthy off this. In November 2023, Pelosi and her husband purchased deep in the money NVIDIA call options for a $120 strike, which was a leveraged bet on NVIDIA going up. NVIDIA at the time was $500 pre-split. She bought $12 call options. NVIDIA was $50 if you adjust it for the 10-for-1 split. By February 2024, so 3 months later, those options increased in value by 85%. She made $2 million in 93 days. This is more than 8 times her annual salary. Now, why is this a big deal? Because despite halting trading for some time for Pelosi, she re-entered NVIDIA with her largest trade in years, coinciding with significant U.S. policy developments on semiconductors. So it is obvious that, Nancy Pelosi knew what was happening in regards to NVIDIA and that she was able to see that NVIDIA was going to go up. And then NVIDIA went from 500 or 50 to at this point 130. So those deep in the money call options have done very well. But, Biden's got a point that, hey, they shouldn't be able to trade. My perspective here, to give a little bit of a counter perspective, is, well, if the politicians are motivated and we can see what they're doing, if you followed Pelosi into every trade she's made, because it's all public, you've made a lot of money as well. So maybe there's an argument that keeping that incentive actually helps them create public policy, and that helps, individual people. Maybe it doesn't, but we're going to have to see what the Trump administration ultimately does on this going into next year. All right, here we go. Wednesday, December 18th, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Tesla at 467.43. Tesla is down just a little bit on the day. Tesla right here down about 2%, 2.4%. So again, some of those fears around JPOW currently still taking place. Wow, Palantir up 1%, 1.23%. Tesla not being too afraid, or Tesla's afraid of JPOW. Palantir is not that afraid of JPOW. Currently right now, Palantir 75.32, not bad. Palantir's up 1.2%. Nvidia 133, that's up 2.4%. Not bad. AMD is up 0.5%. AMD still trying to find its bottom. 123, I think, was the bottom yesterday. Currently right now at 125. Bitcoin 104,644. Not bad on Bitcoin. Robinhood still struggling, down 1.93%. We're holding the 40s. We have not gone below the 40s, but Robinhood still struggling to be able to get onto those levels when it comes to increasing. For those that are saying the bell is muffled now, I guess the mic finally heard your concerns and it's muffling the bell. So for everyone who hated the bell, that's an issue with the mic. We'll fix the mic in the coming weeks. At least right now, the mic is not messing up my actual voice. But for those who hate the bell, say thank you to the mic, because the mic is saving you from hearing the bell at 9:30. Marathon's down 1.73%. Rocket Lab's down 0.5%. CleanSpark's down 1%. Coinbase is down 0.84%. MicroStrategy is down as well. All the crypto proxies are getting annihilated. Not really annihilated, but you know what I mean. They're down about 2-3%. MicroStrategy right here down about 1.3%. IWM is actually up. IWM is up. Wow, Palantir, some pep in its freaking step. Take a look at Palantir. 76.14 on the day. Holy crap for Palantir. 76.21, up 2.4%. Folks, that is getting close to that 77.78 level that we were at. No, this is the exact level we closed at before the NASDAQ inclusion on Friday. So we're right back to where we were on Friday when we pumped 3% 4 p.m. last week on Friday. So that's not too bad. 76.50. We did get two deals. We got $119 million from the Army yesterday, and we got a new partnership with Pray.com. One of them not expected, one of them expected. Not the biggest deals in the world, but still maybe some good news that the market's getting excited about. And that's why they're buying up Palantir right here. Nvidia at 134, that's up 3%. Nvidia getting some love right here. Grab is flat on the day. Robin at $40.95 down. That's down 1.63%. Rocket Lab was up 5% yesterday. 26.43. Rocket Lab is still up currently right now. SoFi 16.90. SoFi trying to get back to 17. A rate cut is going to be bullish for SoFi, and the market might be thinking we're going to get that rate cut. So SoFi right there trying to get back. SoFi is 2 cents away. I think we get there. Let's see if we get there. Oh, by the way, there we go. We got to 17. There we go. SoFi, $17, not bad. By the way, for all of you guys who would love the quantum computing names, Martin Shkreli is super short these names. He's short QUBTS, QBTS, IONQ, all these names. Last night when I was on the spaces with him, he was saying that this is one of the biggest bubbles ever. I'm not saying that. He's saying that. So just one thing to think about. But Shkreli definitely believes that these quantum names are frothy currently right now. Also, he's not a fan of SoundHound. He likes the company, but he thinks that paying $7 billion for it is a bit expensive as well. But it doesn't matter what he thinks, because SoundHound is up right here, 4%. SoundHound is basically up 50% over the past 2 weeks, which is absolutely incredible. So for those who are in SoundHound, congratulations, because that one is doing very, very well. Rocket Lab right here, 26.52. Nuke got suspended. Wow, this stock was up 77% today, got suspended. 77% today. It was up 900% yesterday. Makes sense that it's suspended right now or halted. It'll probably be open in like 30 minutes or 20 minutes. But that one, this is what I mean by some froth, right? This thing was up 900% yesterday. It's up another 70% today. There is a little bit of froth coming into some of these small caps that are getting some momentum. And currently right now it's halted. Wow, look at SoFi. Look at freaking SoFi. Holy crap, 17.18. Oh my. Let's take a look at the SoFi options. Folks, we are up 450% on the SoFi options. We are taking 3,500 and turning it into 50,000. We're going to do it. We're going to freaking do it. It'll be the biggest trade of my life. Let's see if we can do it. Should have bought more, dude. I should have bought at $7. I should have bought more. But we got to get to 20 by 2026 January to turn 3,500 into 50,000. We're at 1710. I think there's a shot. Maybe we get into that $20 range. Look at that. And there were a bunch of employees selling yesterday, like a bunch of employee SEC Form 4s that came out yesterday. They had to sell for tax purposes, all this stuff. So there was some selling pressure yesterday after hours from, I guess you can say insiders, but they're not really C-suite executives. They're just regular employees. But still, SoFi getting some momentum right here, up 3%. Archer, look at Archer. It's trying to break $10. Archer, $9.50. Archer's up 4.5%. Archer is up 4.5%. Not bad at all for Archer. Pretty damn incredible. Where's Palantir? Are we still moving? Yeah, Palantir 76.37. We're still moving. We hit 76.80. Let me check resistance real quick for 77. Resistance real quick for 77 on Palantir. I'm curious why Palantir is getting the move this morning, especially before JPow. It's kind of a mixed market, guys. Tesla's down 3%, and maybe the argument is because Tesla was up 20% the past week, but still, not all stocks are afraid of JPow today. but some of them are more afraid than others. 75 or 77 for Palantir is 49,000 shares. 49,000 shares. Not too crazy. There is some shares there, 49,000 shares. Nvidia's up 2.45%. AMD's up a little bit. Let's check on the semis. They're all green except Broadcom, which makes sense because Broadcom went up 45% in 2 days. And Lam Research, that one's just down about 1%. Everything else is green. Dell is green. Micron has earnings today. We'll be covering Micron and Lennar today. That's going to be a big one. Intel's green. SMCI is green. AMD's green. And then Nvidia is up 2.43% of the day, which is not too bad. Not too bad at all. Wow, dude. So Powell's speaking in a couple hours, and the semiconductor industry is not acting like they care. Let's take a look at the Mag 7. The Mag 7 kind of cares, except NVIDIA. So everything's down on the Mag 7. Now, granted, again, these guys have been running up the past 2 weeks, so you could understand a red day here and there on a lot of them, and Meta's barely red right here. But they are down. Google also was up from 160 to 195. Google's down a little bit. That's okay. NVIDIA, some of the money rotating back into that one. Looks like NVIDIA is not going to give us that 120 price that a lot of people wanted. Tesla right here down about 3.3%. Apple still hit an all-time high yesterday. I mean, Amazon breaking out into the 230s. A lot of these companies are still doing incredibly well. And Powell today is going to decide kind of where they go from here. Bitcoin at 104,000. You got PayPal that's down a little bit. SoFi still holding above 17, which is not bad. A close above 17 would be incredible today. Disney at 114. Meta at 618. Roblox at 61. Roblox was at like 40 this year. So Roblox, or I think it was at 35 this year. So Roblox has had an incredible run. Yeah, it was at 29 all the way to 61. So not bad for Roblox. You got Apple right here at 251. And then you got Alibaba as well, struggling. Some of the Chinese stocks still not getting enough stimulus to continue gaining momentum. Palantir 77, we got there. We got there. We are getting there. We are 16 cents away. 16 cents away. Dude, that's higher than the NASDAQ inclusion news day. That's higher than the NASDAQ inclusion news day. So if we get above 77, that would be incredible right here. 5 cents away. There's only 50,000 shares there. Let's see if we can get there. MSTR. Where is MSTR as well? MSTR is down 1.5%. Oh, there you go. We hit 77. 77 on Mr. Palantir. Again, guys, the strength of this company, it's just unimaginable, holding a $175 billion market cap. Palantir does not care. Quite frankly, the market is willing to still be a part of the story. I mean, you're not even seeing buyer fatigue, right? We got a couple of days of exhaustion, but outside, I mean, the dip was $68.07. So that was the dip over the past 2 weeks for Palantir. Like, that's just amazing. SoundHound, by the way, going crazy as well. Look at the SoundHound chart, dude. It looks like a meme stock, but SoundHound is not, a meme coin. SoundHound is not a meme coin, but it looks like a meme coin, and a lot of people got excited. Now, NVIDIA did invest in SoundHound, so that's another thing SoundHound has going for it. They were blessed by the Jensen touch, and they're getting momentum. Lots of people are coming into the industry. Now, SoundHound also acquired a company to generate a ton of revenue as well. So that's one thing to remember when you look at the revenue numbers. But regardless, investors are willing to give SoundHound 116 times price of sales, up 11%. It's up now 1,500% in the past 3 months. Yeah, if you got in this one, congrats. If you got in this one, congrats. SoundHound is doing their thing. SoundHound is doing their thing. Yes, a bunch of you guys talked about SoundHound before. Look, I didn't get into it. Look, there's some things I just don't get into. And SoundHound at $4 or $5, I wasn't. You guys should kind of see my investing style by now, right? Grab at $4 or $5. My price target is $10 in 2 years because they're becoming profitable. That is how I'm comfortable investing. SoundHound was a little bit more of a gamble. You had to bet on the potential, which is fine, but that's just at this stage of my investing journey, I'm just not willing to take that type of a risk. And for those that were in this market, you've done very well. Congratulations. Also think about trimming and, protecting some of those gains. But I just wasn't able to take that risk, dude. Not at $4 on a company that, really I couldn't see the earnings growth, none of that stuff. So, and that's okay. That's okay. That's why I missed out on it. But for those that made money on it, you are doing very well. Rocket Lab right here, 2651. CleanSpark at 1242. Dow Jones at 436. SoFi still holding 17, bro. SoFi is really still holding 17. And SoFi's not giving that up. Where's Uber? Who's buying Uber, by the way? Who's buying this thing? Uber's at 6244. I know a bunch of you have been messaging me that you think Uber is a buy. I think the narrative on Uber is a little tough to deal with, but I still think Uber is a buy, although I'm not buying it, because I think the Tesla narrative is real. But I would not be surprised if Uber is back at 85 by February, because the Tesla narrative kind of just like chills out for a little bit. and then Uber goes up. I could absolutely see that happen. But it's just going to be a question on what it means for the Tesla narrative to ultimately go forward from there. When is J Powell speaking? 2:30. I'll be live at 2:20, 2:25. I'll be live on the show. It'll be a long market close. It'll be J Powell for like an hour and a half, and then market close with Micron earnings. So it'll be like a good 3-4 hour show. Wow, Palantir's breaking out. But 2:25, I'll be live Eastern Standard Time. Palantir, it just hit 77.20, then got rejected. Then came down to 76.92. But we got up there. There's the red candle right there from 77.21. But we did get there. Micron's up a little bit before earnings. NVIDIA getting a nice boost, 3.5% on NVIDIA. Robinhood struggling right here, down 2.2%. Rocket Lab still up. CleanSpark's up a little bit. Coinbase is down. Marathon's down. All the crypto proxies are getting hit. Again, Martin Shkreli, I was on a Spaces with him last night. He is short MicroStrategy and short Bitcoin. And I'll pull up the clip in a second, and we'll get to listen to my question to him. But I asked him, hey, like, don't you think Saylor has a point around, you know, the Bitcoin premium and the options market and all the Saylor arguments we've been listening to? And he was like, no, it's stupid. He was just like, Saylor is the most irresponsible person in the history of markets. So you do have some people that completely disagree with the MicroStrategy strategy and do not think that this is an appropriate use of capital and think that he's going to get burned really badly. But then you got a lot of other people, aka the MicroStrategy shareholders, that are buying this up and that do not care. MicroStrategy right here down 2.88%. Another reason MicroStrategy might be down is because Saylor might be tapping the ATM, and that means more dilution to buy more Bitcoin, which is good for the Bitcoin yield, but not good for the actual yield because there's more shares when he issues those shares to MicroStrategy shareholders. So that's another thing we have to think about, and that is another reason it could be down 3% currently right now. Garcia says more like MicroStrategy. Yeah, it's definitely more like MicroStrategy here versus just MicroStrategy. He's not a Bitcoin bear. He believes in Bitcoin. He was playing with crypto in 2011. So he's not a Bitcoin bear. I mean, he clarified that last night. He just thinks there's a lot of froth. Like I asked him, I was like, wait a second. Do you think like we're headed to a global, because he kept talking about 2008. I was like, do you think we're headed to like a global financial crisis? He was like, no. I just think there's too much froth in Bitcoin because if Fartcoin gets to 1 billion, that means there's too much money. And MicroStrategy is like the easiest way to go short all of that froth, at least from his perspective. So it's not that he's bearish crypto. It's just that he doesn't really believe in it in terms of like the use cases and like the value of it. And what the main point he was making is that right now speculators think it's all going to go up. They all think Bitcoin's just going to keep going up. And, you know, given if you know anything about Martin Shkreli, he's a bit of a contrarian. And he's like, I'm going to take the opposite view. I'm going to say it's not going to keep going up, you know, and that's why he's currently shorting it right now. So that is his perspective in terms of how he's thinking about it right now. Yeah, Adam in the chat as well. Again, Adam, admit I sold all my MicroStrategy proxy. I don't agree with this aggressive ATM. So Adam, one of the guys who you guys know has been in MicroStrategy since like $40 earlier this year. He made some good money off of it. He just said right here in the chat, he sold all of his MicroStrategy. He doesn't agree with the aggressive at the money offerings, creating the dilution, which is obviously not good for shareholders. Once Saylor stops doing that, I think more people will be excited like Adam. But if Saylor keeps hitting the at the money to get money to buy Bitcoin, you know, there's going to be a lot of people that are pissed off about that. Amazon 229, SoFi still holding 17, Google just falling a little bit down 1.3%. Oh, Waymo's expanding to Japan. We talked about that yesterday. So that's super bullish for Google. Waymo and Tesla kind of the leaders now when it comes to this robotaxi world. Verizon right here, $40.86. Celsius is down 1.64%. Enphase is up 3.2%. SolarEdge was upgraded yesterday by Goldman Sachs. They were up 15%. They're up another 8% today. So that's why Enphase is probably getting a little bit of love as well. Palantir 77.28. We are holding the 77s currently right now on Palantir. FOMC meeting is at 2:30. 2:30 Eastern Standard Time. FOMC meeting is 2:30. So we will be live in a few hours for FOMC as well. Oh yeah, Honda and Nissan are in mergers. This is not a good thing. This is a good thing for Tesla. It's a bad thing for legacy auto. If Honda and Nissan need to get merged together, it means they're kind of seeing that consumers are consolidating their choices and that it would be easier to just come together versus necessarily compete with each other. They're also trying to create one of the biggest electric vehicle divisions to go against Tesla. The two companies aim to combine their resources to strengthen their position against Tesla and Chinese electric vehicle manufacturers in the fast evolving automotive industry. So I think it's super bullish Tesla because it means if you're getting two guys to admit defeat and come together, these are two big companies, dude. Honda and Nissan are massive companies. If they come together, then that means there's definitely some consolidation in the broader automotive industry. And that is very, very bullish Tesla. Hesan. Yeah, it's called Hesan. Has anyone ever bought a Honda or Nissan before? I bought a Honda Civic before. The Nissan, I think the Maxim, what is it called? Nissan Maximus or something? That's the name of their like premier vehicle. I never bought one of those, but that is like the main car that they sell as well. Honda Civic was great. Yeah, I loved my Honda Civic. It was a great 5 years with it. But we moved on to the Miracle Whip. You know, we moved on to the Tessie. I have to make my first $490 payment for Tesla on December 22nd. So once I make my first car payment, you know what's so funny, dude? When I was in college, dude, this is how dumb you are in college. When I was in college and I bought my Honda Civic, I had to do a $311 monthly payment, and for some reason the payment didn't go through into my bank account like the first month it was due. And I don't know what it was, for like just something got messed up and the payment didn't go through. I had the money in my bank account, but like something happened with Honda, the Bank of America, whatever. And I was like, I just got away with not having to pay a monthly payment. And I was thinking I was hot shit. I was like, yo, that's awesome. I don't have to pay a monthly payment on my car. And then I get a call by Honda Financial and they're like, sir, you need to make your monthly payment. It was so funny. I was like, wait, I do? And they were like, yes, it didn't go through. I was like, oh, I thought that was your fault. And the guy was like, I don't care whose fault it is. Just make the monthly payment, please, or else we're going to have to charge you like a fee. And it was so funny because I was like, I thought I finessed the system, bro. And they're like, no, dude, like you bought a car. You have to like pay the payment. And I was like, oh, okay. So, you know, having to pay a monthly payment of $300 when you're 20 years old, it teaches you, you know, you got to come up with that $300 somehow. So I will gladly be paying my $500 payment for Tesla. Where's SoundHound? Is it moving? SoundHound still moving, 12.9%. That's up. Palantir still holding 77. Grab at 517. IWM at 232. MicroStrategy 379. Tesla recovering a little bit. It was down 2%, back to 470. Back to 470 on Tesla. Classic emit. Dude, I legit thought that like I finessed them. I was like, yes, I don't have to pay $300 this month. It's like, nah, bro, you gotta pay your bills. Like that's not gonna go. You can't get out of that. Is Archer moving? Why didn't anyone tell me Archer was moving? Oh my goodness, Archer's up 13%. No one wanted to tell me Archer was moving? 13%. Dude, remember when I was almost gonna buy 100 shares right before earnings at $3? Yeah, that didn't happen. You guys told me not to do that, which was responsible at the moment, but that has 3x'd from here. $10.22. Look, I'm not in Archer. My plan was to get in 2025, but Archer has been doing its thing. And I still want to get in Archer in 2025 because the put premiums and the covered call premiums are fantastic on Archer. Obviously, I know I'm not buying like a real company with earnings. I'm buying potential. But even then, if I could get a $7 put and get 5% premium and get assigned those shares, I wouldn't hate that for Archer because I do think there's a lot of potential. They just partnered with Anduril. They have a $6 billion backlog of deals. They just launched a defense business in yesterday. They announced a defense arm of their overall business, which makes sense why they partnered with Anduril. I think there's a lot of potential in Archer. Is it getting stretched? Probably, but I still think there's a ton of potential with Archer right here. So this is not bad. This is not bad at all. Yeah, Doug was in an airport when we had that live stream when I asked you guys, should I buy Archer? And the chat voted no. And then Doug texted me and he bought like 100 shares instead of me. So shout out to Doug. He went the opposite of the chat that day. But no, look, if you're an Archer, I don't really think there's a reason to sell it. Obviously, if you're up 3x, you should probably think like, hey, is this that sustainable? Is this kind of frothy? And I think there's an argument there to like take some profits. But I also think they have a lot of potential. And that potential right now is, I don't know if it's necessarily undervalued or overvalued based on that potential, but it's definitely catching momentum with the broad masses. Also, I mean, look, they have a $6 billion backlog. Market cap is $4 billion. You could argue there's a discrepancy right there that makes them valuable. Obviously, the $6 billion is not revenue or earnings. It's just the backlog. So you can't literally say $4 to $6 billion is a mismatch, but there is excitement for Archer, and that's why it's getting some love. Oklo is also up 22%. So Oklo right here, I don't think they got a new contract today, but this is a nuclear energy startup. This one literally has no revenue or earnings, but this one also based on potential. This one's up 19% currently right now. Is Joby moving? If Archer's moving, where's Joby? Yeah, Joby's up 5%. Not as much as Archer, but Joby is moving as well. The thing that would suck for a lot of these names is if, like Fartcoin at $1 billion, right? Is Archer, Oklo, and Joby, I'm not saying they're literally Fartcoin because they're not a meme, but is the valuation getting to the point where there's just so much money chasing these names? I don't know. And that's something that shareholders are going to have to figure out. What is really curious to me, though, is that Jay Powell speaking in 3 hours, he might be hawkish, and some of the most speculative names in the market, like Oklo, is up 20%. Oklo just got a new contract. Okay, so that's probably why Oklo is getting some love. But still, dude, I mean, for Jay Powell to be speaking today, and for these names that, again, are kind of the definition of speculation in the market right now, for them to be getting this momentum, that's them saying, we don't care about Jay Powell. I mean, that's one argument about they don't really care about Jay Powell. Here's the deal from Oklo. Oklo, they are trading after the nuclear fission reactor company and Switch, a provider of AI, cloud, and enterprise data centers, signed a non-binding master power agreement to deploy 12 gigawatts of Oklo energy through 2024. Okay, so that's why Oklo's up. Now notice there's no revenue or there's no like deal size to this. So we don't know exactly how much money they're getting from this, which is why the market's buying it purely on potential. Again, that's fine. It's just doing it on a day when Jay Powell might screw up the markets. I mean, that's just pretty incredible. Oklo was just up 22%. Now it's up 16%. But it's pretty incredible to see these names say, we don't really care what Jay Powell's going to say later today. 12 gigawatts is a lot. That is correct. I mean, 12 gigawatts is not a small amount, but the market's also expecting Oklo to get these deals, right? And so they definitely want to make sure Oklo, if you're buying Oklo, that there are some contracts that are happening. Palantir right here, just below 76, 75, 85. Where's Hoodie? Hoodie's struggling, 40, 52. I would say Hood is consolidating, but I also think there are people taking their profits on Hood. I mean, at the end of the day, Hood's had a really good run. Hood doesn't trade like a meme stock where it just keeps going up and up and up, right? Kind of just like chills out many times. Bitcoin, Bitcoin's not really down, so I don't think Hood's going down on Bitcoin. I think people are taking profits, which is okay. It's fair, especially if Jay Powell messes up the markets today. Hood is contingent on the markets. We could see Hood get some weakness if we see the S&P collapse, or if it goes down 1 or 2%. So I think it makes sense that people are taking some profits on Robinhood. CleanSpark 1240, UNH, that one's up 3% on the day. SoFi just below 17. SoFi was holding it nicely. The fact that we were able to break above 17 and hold it for like 20 minutes means that I think we'll be back there. Maybe not today. Maybe today. It'll depend on what Jay Powell says, but we clearly broke 17 easily. It wasn't like 17 was a problem to get above. So I think we will be back there. Michael, good morning. Thank you for being here today. Again, Jay Powell speaks at 2:30. So we'll be live at 2:25 and we will be covering what Jay Powell says. Chris CRM says, I love these little spec companies, but also concerned big money is helping push it up, and we'll do a rug pull. Seen this one many times before, same or different. It's a fair point. It's a really fair point. I have no idea. That's the problem with being in speculative names. Sometimes hedge funds come in, they see the excitement on an Oklo, they buy up millions of shares, push it up 22%, take their profits on that 22%. They get a bunch of retail to buy in because retail inevitably chases. We've seen that happen time and time again. And then, sometimes retail's left holding back. This is why I didn't chase GameStop back in May. Like I made it and honestly, I haven't chased any of these names because I kind of did that back in 2021. And I wanted to say I've matured more from that. Not saying that there's not fundamental theses around these names. And if you know those theses and you get into them, then amazing. You do really well. But if you don't have a fundamental thesis and you're literally just chasing, that's when it gets scary to me as an investor, because I feel like at some point you have to mature and realize, look, if I don't know anything about Oklo, I can't just buy it because it's up 17%. Like that's not a sound strategy for the rest of my life. Like, what am I doing there? And if you're just gambling and you have some YOLO money, that's totally fine. But if you're putting some big money into a name because it's up 22% for the hell of it, like, I don't know. That's just like, I don't think I'm at the stage of my life where I have FU money where I could do that, right? And so that's kind of why I haven't chased the names. GameStop, by the way, it's up 6% from yesterday, down about 2% right now. But GameStop has done decently from July when it was back at $22. Broadcom recovering as well. Broadcom was down 5% in the pre-markets. Now it's down 1%. So the Broadcom opportunity seems pretty exciting for a lot of investors. SMCI is down about 1.69%. Where is NVIDIA? NVIDIA is still holding 3.4% on the day, which is not bad for NVIDIA as well. All right, cool. Let's see some news headlines. Let's get some updates. What else is happening in the markets? Let's see. Oh, here's a good chart. This one's interesting. So take a look at this. Here are the returns since November 5th, aka the election. Fart coin, 100 or 1,500%. Dogecoin, 131%. Tesla, 91%. MicroStrategy, 70%. This is as of yesterday. Coinbase, 61%. Bitcoin, 52%. Trump Media, 12%. And then everything else is kind of, whatever. The things that have lost money: oil, down 2%. International stocks, down 2.3%. Gold, down 3%. Energy, down 4%. China, down 5%. And then healthcare, down 5.8%. So Fartcoin has literally outperformed everything since the election, which is kind of wild. But that is indeed what happened. And then obviously you have some other names like MicroStrategy, Tesla as well, getting some love since the election. We're going to have to see kind of ultimately how that plays out for some of the coins that are getting momentum. Tesla recovering right here. Take a look at that. Wow. Tesla's a tank. Tesla's a freaking tank, dude. 472, only down 1.6%. It was at 465. Yesterday, I think it closed around that 470 range. So Tesla really wants the 470s. It doesn't want the 480s yet. It has been really shy of the 480s, but it has been holding on to 470s very nicely. And it's been holding on to these levels. And really, there's tons of buyers stepping in to continue getting more exposure to Tesla. Tesla's being a tank. Are you actually saying Fartcoin? Yes. I mean, I kind of have to. Like, that's... It's outperformed, dude. It's outperformed. I haven't bought it, but Fartcoin is up 1,500%. MicroStrategy is still getting hit, dude. MSTR down 2.1%. Again, if you bought it at 200, you can't be upset. But a lot of people bought it at 450, 500 2 weeks ago, and they're probably upset right now. So MicroStrategy, granted, it's so volatile, it could be back there in like a week. That's the cool thing about MSTR, but it is a volatile name. Robinhood really getting hit. Okay, so Robinhood's price action to me is acting like J-Powell's going to be hawkish. S&P is going to be down 1%, and Robinhood probably bottoms at 38 today. That's what I think could happen if we go down the hawkish route. Because that's how Robinhood's acting. Now, some of these other stocks are not acting like that, but Robinhood is acting like that. So J-Powell's going to determine a lot of this. Apple barely losing any steam, 252. Apple, $3.8 trillion market cap. AMD, 125. AMD still green. Rigidity Computing, another quantum name, that one's up 8% on the day. Adobe getting hit, 452. Meta, 625. Don't know if TikTok's going to get banned or not, but Meta still holding that 600 level, which is not bad at all. And then Uber up 2% on the day, 62.63. Webb, thank you for the $2 super chat. Thoughts on Grab January 2026 call debit spreads $5 to $10. I would rather do Jan 2027. Again, I'm a little bit more conservative here. I would give Grab more time. I don't hate this. I don't know if you get to $10 by 2026. I think there's a good shot, but I would do 2027. You're not paying that much more of a premium, and your return is still really good. It's like a 5x, and you get another year, right? And I think in 2 years, Grab has a much better shot of being at that $10 range. Nuke is going wild today again. Did they get unhalted? Nuke, did they get unhalted? No, they just got halted again. So I guess they got unhalted in the morning, and then they got halted again. They're up 79% on the day. Again, there's just no way we can deny this. This is a little frothy, dude. Seeing random small caps go up by 1,000% in 48 hours. Like, there's money that's out there and that's chasing. And the problem is I don't think that means the market has to collapse because fundamental earnings are good, but that could mean that there needs to be a little bit of a flush out. And that could coincide with the 10-year. Where is it at right now? Hitting 4.4. And that could lead to J-Powell being hawkish today. That's just one thing we got to remember. For those that are just joining, mortgage rates also went back up again to after 4 weeks of being down. So that 10-year is determining a lot of stuff. 4.391, so basically 4.4 in the 10-year currently right now. It could also be a melt up. It could also be a melt up. That could be happening right now as well. And that could be leading the markets to kind of be in the situation that they are currently in. Okay, let's listen to Mike Wilson. So Mike Wilson is the famous super bear that officially turned bullish. Like, when did he turn bullish? He turned bullish, I think at the beginning, or sorry, at the beginning of the summer, or at the end of 2023, but he wasn't really bullish. He was kind of like fake bullish, and then finally he came out with a $6,500 price for the S&P 500. So this guy, he was calling on a collapse in 2023. For the first half of 2024, I believe he was calling on a collapse. His target was like S&P, I think 4,000. Obviously, that didn't happen. So he's back. Let's get his perspective from Morgan Stanley, where he thinks the market's going, if we're frothy or not, and how he thinks 2025 will play out.
is we got the broadening out in the fall on three things. A, we priced out the recession risk, which was kind of creeping into markets. The Fed went 50, which, was a surprise and maybe not even necessary. And so that got people juiced up. And then, of course, we had the election. And I would say the election was positive for two reasons. We talked about this last time. One, we got a Republican sweep, which markets tend to view more positively. But more importantly, it was definitive. And so a lot of those hedges came off. And those hedges were in some of the lower quality areas. And so I think that kind of basically pulled forward the initial move on the broadening out. And now what's happening is because rates are back up, there's some concern about the Fed not being able to cut perhaps as much as people thought. And so we're seeing a de-risking kind of into year end or just some profit taking, quite frankly. So we'll see. I mean, look, when you read the note, but I mean, we said we think there's a broadening out. That's not what we think. That's what the consensus thinks. Okay. So in other words, that's the expectation. If the consensus numbers are hit next year, bottoms up, we will see a broadening out. That's the key. It's about earnings revisions. And we're just being a little more selective on that. So we upgraded, financials. We've been more constructive on software, some of the industrial names because of the earnings story. And that's how we're going to trade this for the next 3 to 6 months is we're going to look for the areas where revision breadth is improving. It's not going to be universal. This is not like coming out of a new cycle. So I want to make that perfectly clear to listeners that we're not expecting a broad rally in the way like 2020, 2021, where the low quality stuff, everything goes up. It's going to be more rifle shotted to the areas where growth is improving.
Let's sit on that distinction. It's not a new cycle. It's a late cycle extension. That's what you're calling it.
That's right.
Why is that so important? What's the difference between the two?
Well,
this is really important because if it's a late cycle extension, basically Mike Wilson, who again has been bearish for a while, he's saying, look, we're going to get a recession pretty soon, but we're just extending the time until we get a recession. If you think we're early cycle, you think we got the next 5 years, right? Yeah, that's kind of like Dan Ives, right? 9:30 at the party ends at 4 a.m. Mike Wilson's basically saying the party, it's 3:50 at the party, and we got 10 minutes left until the party ends. Dan Ives thinks we have 10 hours left.
We're getting what we usually get. We called it classic late cycle back in 2017. It's actually the most bullish part of the cycle because the Fed is moving, multiples expand. So let's just talk about what happened over the last 12 months. It's exactly what's happened. Earnings estimates have not gone up for 25 and 26. They've just rolled forward. Multiple went from 17 times to 22 times. That's very typical in the late cycle period. You typically get narrowness, which is what we're getting right now. The quality stocks have continued to work with this back and forth, this uncertainty around, is it a hard landing? Is it going to be a reacceleration of growth? Is the Fed doing enough? Are they behind the curve? Are they ahead of the curve? And that creates these really opportunistic rotations.
How much is this late cycle trend turbocharged by the idea that there is no alternative than the United States right now?
Well, that's a very good point, Lisa. I mean, we wrote about that in our last note about a month ago, or that monthly note that we put out, just saying, we were in Singapore talking to investors all over the world. There's just no interest for anything except the U.S., this U.S. exceptionalism idea. I think Trump winning just makes people, it's like a magnet because it's like, they're just going to put all their resources now internally. And so that helped. And I think that's price. That's what the markets are saying. Okay, the markets are basically saying that's correct. Now, is it overpriced? Potentially. I mean, clearly in some stocks and sectors it's overpriced, but that move is not wrong. I think the markets, investors are just seeing what's right in front of them. They're saying that America is going to take share. America has this America First agenda.
When you talk about
So look, ultimately Mike Wilson's thinking, hey, we do think there's going to be rotation. We do think the market's going to broaden out, S&P 500 going green right there. But we do think it's late cycle. And that is a stark disagreement with Dan Ives. Dan Ives does not think we're late cycle. Dan Ives thinks NVIDIA is going to, I don't know if he literally thinks this, but I think he thinks NVIDIA is going to 10 trillion. And if NVIDIA is at 3 trillion, that's early cycle. We are 3x away from 10 trillion. That doesn't mean there's going to be hiccups, but it's going to be hard to see some massive recession because then it's going to be very hard for NVIDIA to have the demand and the unit economics and the overall market sentiment for investors to put their money into the company to get to 10 trillion. So you got one guy saying, hey, markets have done really well over the past 2 years. It's going to be really hard to go for a three-peat. And if we're not going for a three-peat, expect modest gains in 2025. And then you got Dan Ives saying, no, we're going for a three-peat. NVIDIA is going to go to 4 trillion. Microsoft's going to 4 trillion. Apple's going to 4 trillion. Palantir is going to do well. Next year is going to be very, very good for the broader markets. One of them more focused on tech. The other one more focused on macro. And ultimately next year, we're going to have to see how it plays out. And Jay Powell today is going to give us a little bit of an inclination on how that plays out. Bitcoin's tanking. Bitcoin's below 104. That's hurting Robinhood as well. Robinhood looks like it might go below 40 right here. Kind of expected before Jay Powell. Kind of expected right here before Jay Powell talks. Rest of the market, though, is not being that bearish. I mean, Uber's up, Palantir's up, SoundHound is still up, IWM is up. You would think IWM takes a little bit of a breather if Jay Powell is hawkish. IWM's up. Like, this is kind of a weird market dynamic we're seeing. Maybe it's based on individual stocks versus the broader market. But like, not everything is red that should be red. Not everything is green that should be green. You're just, even Tesla for almost 474. Tesla barely down on the day. I mean, you're getting a really resilient market, even though in 2 hours we have Jay Powell speaking. Has Dan's tune ever been bearish? Look, that's fair. I think Dan will tell you, and he'll be on the show tomorrow at 10:30. I think he'll tell you that after the, what was it, .com crash, because I asked him this a while ago, he was like, there weren't really any good companies to analyze from like 2005 to 2010. And so it took a long time for like us to, that's why he's so excited about this bull cycle, because he's been through the ups and downs. And after the .com crash, there was a good, I mean, dude, people forget, there was a good 3 years of flat movement on the S&P after the .com crash. Like a good 3 years of nothing. Could you imagine, with all the media attention and excitement of waking up every morning for the market open and everything's flat and there's nothing? And it's just like, you know, we're like, for the next 3 years, which would be like 800 market opens or whatever, it's just flat every day. And we're just looking at like grass, like, or paint dry, right? Like it's like, I don't know if like, I don't know if the world can handle that. I think we're too growth oriented, where our attention spans are too quick. Like, we need growth and movement, and we definitely need growth and movement because we have $36 trillion in debt. So I don't think we can afford to have 3 years of stagnation, but that did happen in the 2000s. And so, you know, Dan Ives basically says that during that time, it kind of sucked to be a tech analyst, but now it's like the golden era to actually analyze some of these tech names. Retail wasn't as big then. Yeah, that's also true. I mean, there wasn't a lot of money coming from retail as well. Yeah, literally every morning I would say, wake your asses up. And like, there would, you know, the market would not be the wake up. It would not be the morning coffee we all need. It would be just like staring at paint dry, literally, which would suck. Doug says it takes way more guts to stay bullish and have everyone think you're crazy than it does to go bearish. Good for Dan. Yeah, you know, and that's one of the things I'm going to ask him when he comes on the show. I'm going to ask him how it's been this year, kind of being bullish in the face of a lot of the bears. Because look, he earned it. Whether you guys like him or not, I know a lot of people don't love his analysis and stuff, but look, he got it right. He kept it pretty simple, and this year has been, you know, a pretty good year for Dan. Who was, okay, so let's ask this question to the chat. Who was there in the year 2000 and was investing in markets? Who was there in the year 2000 and was investing in markets? And what was it like? Because I think one of you guys said in the chat that the year 2000 was not fun. Who was in right after the .com crash in that 3-year period? Put it in the chat. And if you can kind of say what it was like, because I would love to see some comments on what that was actually like being in that time. Sachin says the question everyone had post GFC was, has financial markets escaped the bullet, or with the Greek bailout and other reeling debt plus geopolitical tension is going to lead another crash? Yeah, and markets bottomed, I think, at the very beginning of 2009 or end of, I mean, let's just look at it right now. S&P 500 bottomed in January 2009. We were at 52 on the S&P 500. So we peaked in 2007, and then you had this nasty decline. But then Obama came and he started stimulating, and you know, this is where you naturally started to get some movement. But it took until 2013 or 2012 to match the same levels from 2007. So it wasn't flat for 6 years, but it was recovering for 6 years. The 2000s and 2003s were just like, you know, not fun because we just had flat, and it was tough to see any real market movement from that time. Okay, let's see some comments. Chris says, I was there by proxy where my dad lost my college fund. Okay, I remember the story. This is why people say Chris gets bearish or he's too conservative. One of the reasons, Chris has told the story many times on the show, his dad lost a lot of money in the .com bubble. And that has always been in the back of Chris's mind when he thinks of taking risks. Now, Chris still takes some pretty big risks. I've seen him go heavy into some names, but it's hard for him to get into a Tesla or Palantir because, you know, when your dad loses your money on names that are expensive, you know, that can stay with you for a long time. So we had Chris who was there. Andy said, I started investing in March 2020. Eric says it absolutely sucked. Mark says I got out and didn't get back in for 20 years. Holy crap, dude. That's what a bear market can do. That's what Martin Shkreli was talking about last night. He was like, people left the markets for years, decades, after how badly they got burned. Because it has to suck, right? Like you buy a stock, you think you have a good thesis, you think it makes sense, and then on your brokerage screen, your net worth, or at least the value of what you have in that company, eviscerates in front of you. You can't do anything about it. Like there's no one you can complain to. It is what it is. It's over. You could try to file some class action lawsuit. Good luck getting a couple $100 if you do that. It's like you're done. It's a dirty, dirty game. It's a ruthless game. Now, the game to the upside is also really spectacular when you see the stock go up, right? So that's the kind of highs and lows of it. But if it's a true bear market crash, I mean, that's what we experienced in 2022 to an extent, seeing Palantir go from basically $30 to $6, and that wasn't fun. But I can't imagine what it was like in the dot-com bubble for people that had to stay with that for 3 years, you know? Because 2022 we bottomed by December, and then to 2023 we were off to the races. 2000s was different. 2000s were different. Such and says the great financial crisis was bad because people were still recovering from the dot-com bubble, especially the NASDAQ. People were underwater for 10 years if they were QQQ type heavy. That's a good point. That's a good point. I mean, 2000 was the dot-com crash, and then 2008, 8 years later, which is not that long, or 2007, so 7 years later, boom, you get the housing bubble. So, I mean, that's true. If you were investing in those early 2000s, you had to go through 2 massive corrections. And what did we have to deal with in the past 5 years? COVID, which was like a 1 month correction. And then we had a nice V shape to all the way into 2021. And then 2022 sucked, but it wasn't like COVID, you know, decimated the markets. We turned on the money printer, and, you know, Tesla 20x'd during COVID, literally 20x'd during COVID. So I don't think my generation has been hit with something as bad as 2008 or 2000, but who knows? Who knows if that would happen? Phil says, I just put it all in indices and went away for a long while and ignored it. Good decision. Yeah, I mean, look, if you're not in individual stocks, that probably was also the best play, because the indices usually tend to recover over a long period of time. It just took a long time for it to happen. Austin says 2000 to 2010 was the lost decade. That's fair. And the interesting thing about it is in 2010, that's when big tech started becoming big tech. Palantir right here, 75.68. That's when Michael Saylor actually took a majority of his net worth and he put it into Apple, Meta, at that time Facebook, Google, Amazon, and Microsoft. And there were clips of him in 2010 talking about why big tech is so important. And so he has made some big bets in the past before, but in 2010, that's where like it was becoming evident to majority of the market that big tech was here to stay. Now, not everyone bet on it, aka Warren Buffett, right? He was kind of late in 2016. He got in, but he was a bit late from everyone else. But if you took a bet on Warren Buffett, I mean, I think he would have made trillions if he put everything that Berkshire had outside of Kraft Heinz and American Express into Meta, Amazon, Google, Alphabet, Facebook, etc. Now, it took a lot of guts to do that. And, you know, most people did not do that. But because it's hard to see if, you know, Facebook, I mean, even Peter Thiel sold the majority of his Facebook during IPO because he didn't think it could get to $1 trillion. But it was easier, in his words, to get from 100 billion to $1 trillion versus 0 to 100 billion. So it was tough to see that revolution. And now the AI revolution is the next thing. Is it tough, or is it easy to kind of see where AI goes? Bitcoin right here, just below 104, 103.8. SoFi 1678, not holding that $17 level, but still holding the 1650s. Amazon at 230, Google at 196. Max 7 is barely down today. I mean, you're barely seeing any red on the Max 7. Tesla is trying to go green at 473. And then you got Palantir here at 75.30, currently still green right now. Doug says AOL was what we would call one of the Mag 7. Dude, I still have my AOL. I still use my AOL here and there. But yeah, AOL was definitely one of the more interesting tech companies back then. I think AOL could have bought Yahoo or bought Facebook or something. A lot of these guys, but then again, Zucks was not selling Facebook, but a lot of these companies tried to get into Yahoo could have bought Netflix. That's why, but then I think they rejected. And that would have sucked if Yahoo bought Netflix, dude. They would have paid like a couple billion. Netflix is worth like 400 billion now. And Netflix needed the freedom and autonomy to, like, you know, build out its own content studio, even though I still think they barely have any content. But Squid Game is coming out December 26th. December 26th, I am staying up all night and watching Squid Game. I really hope I'm not disappointed, bro. You guys know me. You guys know I don't watch shows. I don't watch movies. When I watch something, I really care about it. It's going to have my attention. Not going to be on my phone. Not going to be on Twitter. I'm going to be watching Squid Game. And I really hope they don't disappoint. And the first one, I think, is the greatest show Netflix ever created. It's the greatest show. It's better than Stranger Things. It's better than everything. I just hope the sequel does not disappoint. Is it season 2? Yes, it's season 2. And so that's going to be important. Mark Cuban scammed Yahoo. Yeah, that was one of the best things, or I guess the luckiest things for Mark Cuban back in freaking in the dot-com bubble. Dude, Yahoo paid him $5 billion for a company baseball games in audio over the internet. Like, and Mark Cuban will tell you how lucky he was to get that deal done. And then he protected a ton of that money because I think he had Yahoo stock. And so I think he bought puts on all of his stock before Yahoo collapsed. Like, he did some wild stuff, but he was able to protect that position. Here's Michael Saylor talking about Apple back in 2012 and his projections on how big it could have been back then.
It was going to $2,000 a share, right? I mean, I'd be very, very long that company. Whoever's selling that stock must be a moron, right? I mean, this is a company that's going to actually have 4 billion devices out there. If they roll them over once every 4 years, they're going to sell 1 billion devices a year. And like we're 3 billion 12 years ago, and then went to 600 billion. If you ask me, Apple Computer is going to $2,000 a share, right? I mean, I'd be very, very long that company. Whoever's selling that stock must be a moron, right? I mean, and it's hot, and it's a power hog, and it's ugly, and it's heavy, and it's like an ugly beige cabinet with screws showing. You don't give a crap. You just want it to be $400 or $500. Okay, you put a phone in your pocket and you sleep on it or next to it. You care whether it's hot. You care what it looks like. You care the battery life. You care about the radio. This is an iPhone 5. This runs 10 times faster than an iPhone 4. There's not an 8-year-old on the planet that doesn't want an iPhone 5, right? Who wants to wait 42 seconds to watch something download instead of 2 seconds? Nobody, right? You don't have to be a genius to run Apple Computer. You just have to every year make the product a bit lighter, a bit more elegant, make it a better radio, make it a better battery. And then I sat with, one of the 10 richest guys in the world for dinner 5 nights ago, and we had dinner for 4 hours, and he did half the talking, I did half the talking, and he's much more successful than I am. I understand that, by the way. As I said, it's like sometimes you got to do other things than just have opinions to make money, right? There's a lot of execution involved in the rest, but I have opinions. So he said to me, Apple Computer, can these guys hold their prices? Aren't they going to follow the model of the PC industry? And aren't their prices going to taper down? Their 40% margins are going to become 30 and 35 and 20. And it's another example of people just know enough to hurt themselves, right? If you're going to know a subject, you better know the subject, because being like a dilettante and knowing part of the subject is just enough to hurt yourself somehow. And I said, no, their gross margins don't have to tailor down. I mean, if you go to France, and this is the benefit of seeing enough, you go to France, you see Bernardo Arnault runs a company, LVMH. They're selling handbags for $4,000, $3,000, $2,500 each. This is a device that women view as fashion, and it's 10,000 years old. And for 10,000 years, no, the prices are not lower after 10,000 years. If you actually care about this thing, how many women have $300 pair of shoes? How many have 2? How many have more than 2? Right? The truth of the matter is when the technology.
He's so right about this, because I bought AirPod Maxes, $600 headphones. Like I didn't even think about, is it too expensive? I was like, you know what? I really want these headphones. $600 for a freaking pair of headphones I paid. Like, he's right about this. Apple found a way to get people to pay up.
Technology goes from being a utilitarian vocational brick that I put under my desk. No one gives a crap about that. To being a piece of clothing, right? A fashion statement, extension of your personality, a piece of jewelry. And iPhones, iPads, they're somewhere between clothing and jewelry and accessory. At that point, they can hold that price point forever. They can basically sell you another $500 device every 2 years forever, because everybody's got 5, and that the first billion people have got that, and the rest of the world's getting elevated up.
So there's Saylor. He kind of sounds the same way he's talking about Apple in terms of how he's talking about Bitcoin. I mean, just in terms of his raw, you're a moron. Like we listened to what he said about dividends yesterday, basically saying the same thing, right? If you buy dividend stocks, you're a moron. If you buy Bitcoin, you're smart. So the same type of conviction has not left Mr. Michael Saylor. The question is he going to be right on Bitcoin long term. Nucleus is up 158%. It is halted for the third time today. I don't know what the hell is going on with this one, but it's up. It's up another 150%. So I think the brokerages are trying to figure out if they can keep letting this one trade. But there is more demand and more. What's the volume right now? Dude, the volume's only 15 million. You would think the volume would be like 200 million on a stock up this much, but volume is not as much as I expected. But still, for a penny stock, 15 million shares is a decent amount of volume going into the same. This doesn't even feel like a penny stock, dude. This feels like an OTC stock. Like it was a $30 million company yesterday. Not even $30 million company, dude. It was a $5 million. It was literally a $5 million market cap company yesterday. It became a $50 million market cap because they got a 10x, and now it's at 80 million. Like that's kind of wild. Kind of wild when it comes to some of these names. Is Hood below 40? Is Hood below 40? Hood is struggling. Did we get below 40 today? We touched it, 39.93. We touched it. And that dip got eaten up pretty quick. So we touched 39. I think we could touch it again, folks, if J Powell's hawkish. I think we could touch it again. So just be prepared for that. I think that could definitely happen. For real says Amit, what do you think about the Fed pausing early next year when we get a growth scare with bonds rallying? Fed comes in, pumps and cuts more than expected. We then enter the path to second inflation. I think that's why the market's scared right now today. I think the market thinks that's exactly what could happen. The 10-year thinks that's exactly what could happen. And we could get a summary of projections from the Fed at 2 p.m. By the way, we'll know at 2 p.m. So I'll be live at 2:25, but on Twitter, if you follow me on Twitter, I will be posting everything at 2 p.m. We will get the dot plot. And if J Powell says we're not cutting early next year because we're dealing with inflation, the markets are going to have to figure out what that means. If J Powell says we're cutting early next year, then the markets might think inflation keeps rallying and the 10-year might go up as well. So it's kind of a weird situation to navigate today. And I really don't know how it's going to play out. But we'll find out at 2:30 what J Powell ultimately has to say. ASML is running. Oh, yeah, there's only 2.5 million shares outstanding on Nuke. So that's another thing that's probably pumping it up as well right now. There's just so much volume and so little shares. ASML up 3%. So you got ASML recovering a little bit. They had a nasty fall back in October from like $1,000 to like, I think 600, but now they're back at 750, which is not bad. Archer still holding 9%. Enphase is up 1.2. Nvidia's up 3%. Tesla 474. Tesla's basically breaking even. It goes up another percent and then it's back. But Tesla is a nice recovery from 467. Grab is down 0.5% today. And Enphase at 74.21. That's down 1%. For those asking about my Grab thesis, I posted it in the chat. I'll post it again. There's a lot to talk about. I don't want to spend a lot of time talking about it because there's a lot to get into. And I've talked about it pretty much every day at this point, but it's in the chat. You can read this whenever you get a chance on Twitter. Look, my conviction is growing more and more and more. I'm in the accumulation phase. I think now Grab is an interesting one for me because I've been through Palantir at $7, $8. I should have bought more. Then I got to Robinhood at $7, $8. I bought a decent amount, but I should have bought more still. Now with Grab, the conviction is not Palantir Robinhood level conviction in terms of this thing's going to go to 20, 30, 40 bucks. But the conviction is pretty strong that it's going to double. And so the question to me now is how much do I buy? And it's actually an interesting case study because this is the third rendition of these stocks that are in single digits that are not penny stocks. It's a $20 billion company. I know it's below $10, but it's not really a penny stock. Palantir was never a penny stock. Robinhood was never a penny stock. They were always fundamental companies, good leadership, good management. They just needed to get their stuff together and the market would reward them. Grab is my third rendition of being on that trajectory. And, it's one of those ones where maybe we get it right again for Grab because the thesis is there, the narrative is there, the profitability is there, EBITDA margins, management, all that stuff. And then I want to see, can I have the confidence to load up on something like this and weather the downturns, even though I'm late because it's already up 70% this year, and keep going from there. No, I'm not all in with Grindr, but where's Grindr right now, dude? Grindr ended yesterday at like 1730, bro. I was up like $5,000 on Grindr. It was great. 1695, baby. Dude, Grinder's going to 20. Grinder's going to 20. I think. I got my position at 14. I am more than happy if it goes to 13. I'll buy more. But once Goldman Sachs 2 days ago said we initiate coverage on Grindr, they didn't say this, but basically they said they have a monopoly on gay dating. I was like, well, Goldman Sachs, welcome to the party, because I said that 5 months ago. Now I should have been buying 5 months ago, but still, I think Grindr is going to 20. But yeah, so that's the thing on Grab. And I think my position size right now on Grab is going to be 10,000 shares, and I'm going to be happy with that. 10,000 shares, and that's it. And we're halfway there at 5,000. So I think we get the next 5,000. It'll be like a $50,000 position. That's it. And then it's a question of, does the conviction really grow to even add more after that? But this is going to be the first time I finally can establish a real position, A, because I actually have the money to do that. And B, I have a clear a trajectory of what, I didn't really know what would happen to Palantir and Robinhood, but I knew they were good companies. This one, I have a clear trajectory and clear exit plan. And by the way, if they get to $10, I think Grab's probably going to 15. If they actually double, that's not going to be for some meme-ish reason. It's going to be because they're growing, and it could end up being a long-term hold. So that's why this one's a little bit more exciting to me, but I don't expect it to happen overnight. Robinhood below 40. There you go. 39.97, down about 3.99%. Robinhood is below 40. NVIDIA 135, up 3.8%. Joby's up 2.3%. Archer's up 8.3%. Oklo just went red. Oklo was up 22%. Now it is red. Again, this is the problem with some of these names. They can go up and down in an instant. But Oklo is currently red. Grab is not Uber, by the way. Grab is not Uber. Grab is a fundamentally different product than Uber. However, they're doing the Uber playbook in terms of building up the network effects and then getting profitable. And Uber CEO is on their board, so they're learning a lot from Uber's mistakes in the past, which is also why I'm confident, because they've got a lot of good people around the company to help lead them as well. I like the Grab leaps as well. I like the Grab leaps. $10, 2027. I like those leaps. But, I'm just buying shares because I don't mind holding on to the shares as well. Amit, you're investing in Southeast Asia before investing in India. Yes, because there's no Indian equity individual names that I can invest in. I don't want to buy an India ETF. Probably next year, I'll start a position in Indian small caps and I'll just DCA every month into it. But there's no Indian equities you can buy because none of them are listed on the NASDAQ. Grab is not listed in Southeast Asia. It's listed on the NASDAQ. So you're not buying ADRs or any of this stupid shit when you buy Alibaba. You're not really buying the shares. You're buying a depository of the share. You're buying legit shares of an American company that just happens to be headquartered in Singapore. Unfortunately, there's no Indian companies that allow you to do that. At least not now. Got my uncle in the chat. He said, I've placed an order for Hood at 38, hoping after Powell's speech it will get there today. Yeah, look, it could get there. I think that's my bottom today on Hood. I think it goes to 38 if Powell gets hawkish. I could see a little bit lower, but I think at 38. I could actually see it getting into 37, 38. Because look, here's my logic. Powell goes hawkish, S&P goes down 1%. Robinhood's a proxy on the market. Robinhood goes down. That's the bear case. The bull case is Powell goes hawkish with a cut. Market says, okay, thanks for the cut. We'll worry about the hawkish stuff after the holidays. We're pumping, and then we go forward. And then everyone hopefully gets to sell on January 1st and have a Merry Christmas and Happy New Year. That's also another thing that could happen. I just don't know. And the fact that I don't know is what makes this exciting. So in about 3 hours, we'll figure out how that plays out. What price point is good for Grab? I like it at this price. I've been buying, my average is like 525. So 525 and under, I like Grab. It went to 496 yesterday. I should have pulled the trigger right at 496. I waited till like 505. But yeah, look, I like these levels. But the good thing about Grab is that it's holding the 5. So Grab again was 350, went up to like 570 after a really good earnings, and it's holding the $5 range, which is what you want to see. You don't want to see it go back down to 3. You don't want to see it go back down to 4. You want to see it stabilize in this range, consolidate, and the next quarter, if they continue the momentum, they should make their way up to the $6.50, $7 range. And then after that, they should keep going over time. Also, the other reason I like Grab, final thing on this, it's international. I'm getting exposure outside of the United States, and the United States is very, very, very expensive right now. So having something outside of the United States that's not as affected by like JPOW, like Grab is really not that affected by JPOW. Could say whatever he wants. It doesn't matter for Grab. I mean, you might have algorithms that sell off Grab or buy Grab, but in general, like the core business really doesn't rely on JPOW. It just relies on execution inside of Southeast Asia. All right, let's do a poll in the chat. Let's do a poll in the chat. Who thinks we're going to pump after JPOW? Who thinks we're going to dump after? Let's go to CNBC. Let's get some headlines, and then I'll put the poll in the chat and see what you guys think. Pump or dump after JPOW speaks.
Is a little bit higher. Financials, technology, healthcare, industrials, communication services, and materials. All those sectors are up right now, but it's being offset by losses in consumer discretionary, energy, consumer staples. Tesla's down 2%. That's a little bit of a different story than we've seen lately. And obviously these big technology heavy weighters move the indexes. There's the NASDAQ. It is down just fractionally. Again, marching in place ahead of the Fed. Take a look at treasuries right now. The story's been higher yields into the Fed meeting. The 10-year yield higher again, 4.39%, 30-year higher as well, but kind of mixed across the curve. We're 30 minutes here into the trading session. Here are three movers we're watching. Shares of NVIDIA are rebounding this morning after being down 4 straight down days and 8 of the past 9 trading sessions. Despite today's gains, the stock is still in correction territory, which means it is down more than 10% from recent highs. Shares of General Mills dropping after cutting its outlook for next year. The cereal maker revived volumes by lowering prices across its products, but higher targeted promotional investments weighing on the forecast. Shares of Salesforce moving higher, the company unveiling its next generation AI platform and hiring 2,000 people to sell its AI software to clients. I did speak with Salesforce CEO Mark Benioff about this big news. That interview is coming up in just a few moments from now, including some new tidbits on what they're seeing as far as demand and orders. But guys, today is the Fed day, so let's get into it. And there's not a lot of mystery about what the Fed is going to do. The market says 95% chance that the Fed cuts interest rates. Is going to be the third one since they started cutting in September. The big question around today is the communication. And it's a little bit of a communication challenge for him. First of all, on justifying the rate cut, I feel like he has to do a little bit of a dance to justify a rate cut in this kind of economic environment. Similarly, David, to what he did back in September when they cut 50. Remember, that was kind of a surprise that they went double to start off the rate cutting cycle. And there was a little bit of a dance with the recalibration thing. So today there's going to be that too. The other challenge he has is on expectations and how he interprets the better economic data and firmer inflation number, and whether he tries to pivot to an every other meeting kind of rate cut, or we'll see as we go. We could go more gradually. We could pause. Language like that, I think, is going to be really important because the market is now ahead of the Fed in terms of fewer cuts. Importantly, today, we're going to get the dots, which is the expectations from the different Fed members about what they think rates.
That's another thing. If the market's already expecting a hawkish shape out, that's another reason we could pump. Because if the market knows that he's going to lower the projections, because like the market knows everything, I mean, like when he lowers the projections, the market will be like, okay, fine, we already knew that. We're going to pump. So, I mean, that could be another thing to think about. The poll right now results, we have 70% say pump, 30% say we're going to dump.
Rates will look like in the years ahead. The dots last time around, and those only come out every 3 months, show 4 cuts in 2025. Forecasts on Wall Street show 3 cuts in 2025. Fed funds futures, which trade, show 2 cuts in 2025. So who's right? Will the Fed move closer to where the market is pricing? Those are going to be some of the big questions that I'll be looking for and that others will be looking for. And then where's neutral? Where are they trying to get to? What's the destination, right? This economy is pretty strong in the face of a lot of rate hikes. Does that mean neutral goes higher?
This economy's strong. There's not a lot of other economies around the world that are
on a
particularly
relative
strong.
basis, yeah, crushing it.
Well, the Fed makes policy for the U.S.
I know. I just do wonder how it figures in. I mean, Germany is so weak. France, Brazil, 5-year credit default swaps at a yearly high. I mean, you go on from there. There's a lot of
even the UK prints
pain
today
out there
are sniffing out stagflation. Some wonder, and odds of a BOE cut.
Yeah, the
falling
firmer
here.
UK inflation is notable, 2.6%. That's a move up because it's been a global phenomenon on inflation. Everyone fell together and everyone's sort of sticky together. Look, here's my chart of the day. It comes from Joe Brusuelas, RPM, economist I've long followed, and it gets to this whole expectation. So back in September when the Fed's, this is the 2-year yield. 2-year yield is most sensitive to policy expectations from the Federal Reserve. When they first started cutting the blue line, the 2-year yield was much lower because we thought that this was the start of a cutting cycle. There was going to be a lot of easing. It was going to come way down. Now, yields are higher. And this is the 2-year yield now in orange. It's not really supposed to happen. Normally, when the Fed is cutting rates, you would expect yields to fall at this time. But the uncertainty over the strength of the economy and the probability of the inflation decline stalling have pushed up yields, which is the signal for the Fed, among many signals, that they can't cut maybe as much as they thought or as much as they wanted in this cycle. Now, we always on Fed Day here at CNBC take a look at what it means for you, right? Mortgage rates, credit card rates, how you feel the Fed's policy. And you can compare to when the Fed started hiking interest rates in March 2022 to where we are right now. And we're still elevated. 30-year mortgage rates, still very high. Home equity loans, still very high. I mean, you feel this, the credit card rates, which have skyrocketed. And again, in March 2022, they were already elevated on the expectation of rate hikes. So there's clearly people are still feeling the impact of higher interest rates. Obviously, it's just not having as much of a destructive effect on the overall economy as maybe the Fed and most economists and investors thought it would.
Right.
Dude, this is going to be an important day, bro. This is going to be an important day. Guys, it's Eastern Standard Time. Eastern Standard Time for Jay Powell. Eastern Standard Time, 2:30 p.m. I'm sorry I can't give every single standard time. I mean, let me see. So 2:30 is what? In California, that's freaking 11, 12, 1. Yeah, 11:30 California, 1:30 Texas, and then I don't know about international. I'm not doing the math international, but it's 2:30 Eastern. So calculate that for yourself, and we'll be live for Jay Powell. So again, even the CNBC people, they have no clue, bro. They have no clue what the hell Jay Powell's going to do, what he's going to say, how he's going to navigate it. And I think everyone's everyone's like just curious. Everyone is curious what is actually going to happen. 7 p.m. for the UK. Yes, 7 p.m. for the UK folks. Now, here's the thing. Again, what she said right there is important. If the market already has baked in a hawkish cut, right? Like if the market already figured out 2 days ago that Jay Powell was going to be hawkish, and then they priced that in because the market somehow figures things out before everyone else. Is he really going to surprise people that much? I mean, the fact that we've been saying that he's going to be hawkish, the market knows he's going to be hawkish. I mean, I'm just thinking of this right now. That could be a very simple reason why we don't dump, because the market already knows. What would create a dump would be no cut, which is not happening. I'm not going to bet the bucket of mayo, but I would be willing to bet the bucket of mayo that we're going to get a cut. That'll happen. If we don't get a cut, all hell is breaking loose. And then if he goes from like 4 cuts next year to 2 cuts, which dude, we're paying $1 trillion of interest on our debt. There's no way we cannot lower rates. Like we're lowering the freaking rates. It's happening. There's like inflation would have to go back to 8% for him to, or not 8%, but maybe like 3.5% for him to be like, no, I don't think that's happening. I hope that doesn't happen. So we're going to lower rates, and the market knows this, which means I don't think there should be that big of a dump. There might be a little bit of a reaction to it that's volatile, but we know what's going to happen. I'm not betting the mayo, bro, because the day I bet the mayo is the day I have let my arrogance and cockiness overdetermine my humility. And that'll be the day where I get humbled. And then I can't not eat the bucket of mayo because then you guys are never going to trust me. And then I would just feel, I would feel bad for like making a bet and not following through. Like I don't like doing that. So I'm just not going to do it. I'm just not going to do it. But I'd be willing to do it. I really would be willing to do it. I'd be willing to, dude, we're going to get a rate cut. There's no way we're not getting a rate cut. Imagine if it actually bets the mayo and ends up realizing he likes it. I don't think I've had mayo no, I had mayo like a couple months ago because my sister accidentally got me a sandwich with mayo. I took one bite. I just looked at her. I spit it out and I was like, I'm not eating. I was like, I don't care. She's like, you're being dramatic. I'm like, no, I'm not eating. It's okay. It's okay. I don't have to eat dinner today. I really don't. It's okay. I'm not eating. I'm not doing it. So I don't think we'll have the transformation. Not this time with mayo. If Powell's the Grinch, there will be no rate cut. Yeah, but I don't think he wants to mess up 2024, dude. Does Powell really want to mess up 2024? Does he really want to mess up this year, bro? We've got, dude, like we have 12 days left or 13 days left of the year. All of us are just waiting. I know a lot of you guys, including myself, are waiting till January 1st to take some profits because it just wouldn't make sense to take it before. And we just need a nice 2 weeks. We don't need any freaking pandemic happening. We don't need Israel and Iran to go crazy. We just need a good 2 weeks on planet Earth to get through the rest of 2024 and then being able to take some profits in January. That's it. That's all we need. And I don't think Jay Powell wants to mess that up. Now, he might secretly want to mess it up, but I don't think the big money is going to allow him to mess it up. Not today. By the way, Nucleus, it is now unhalted up 130%. 27.68. Up 130% right now. Melanie says we need a correction. No rate cut now. Wait until Trump's in office. Yeah, look, I'm not denying that we definitely probably need a little bit of a correction, a little bit of a pullback, but it's not happening towards the end of the year. Like it's not happening the last 2 weeks of December. Historically, it's not on the market side to go down in December. So I don't know. I think we'll get it, but I think some of us will take some nice profits before that happens. And that's the scary. Not the scary thing, but I'm trying to figure out. I will be in a decent amount of cash in January, and I don't know if deploying that cash is going to be the right thing until like March, until we kind of see what is the Trump administration like, right? Are we tariffing the shit out of everybody? Are we actually going pro-growth? Are we getting rid of regulations? Like, what's going to happen? I think it'll be okay, but I have no clue. We're going to have to see what happens. But it's going to be one of those things that we have to think about in the next few months once Trump's in office. Bart Van Den Eind. I'm sorry if I'm saying your name wrong. Thank you for the 119 currencies. I appreciate that. Hi, Amit. I would like to buy for an amount of 100K one company. I bought and sold Palantir following your channel. So any thoughts? Bart from Belgium. I think your question, Bart, thank you for the super chat, is saying you have 100,000 and you would like to put it into a company. As in you would like to buy stock. First of all, thank you for the 120 super chat. Really appreciate that. Euro. See, I was going to say euro. I don't know why you guys put it in the chat. I was about to say it. You guys didn't need to correct me, but thank you for the 120 euros. I was saying currencies because they, them pronouns. Let's try to be respectful to the currencies. Make sure I don't, make it upset. So that's, I was being a nice guy, but thank you for the 120 euros. Appreciate it. In terms of 100,000 into one company. Okay. So I can definitely not give you any advice on where to put the 100,000 into a company. Quite frankly, I would say hold on to the 100K. And I said this last week, if anyone asked me, hey, I have 100K, where do I put it? I would say nothing, right? Now, look, I'm buying Grab, so I like Grab. That doesn't mean I think you should put 100K in Grab, but that's the stock I like. I like robbing it at $40, but it's kind of hard to initiate a position if you haven't been in it for a while because it could obviously see a correction because it's up 200% year to date. So realistically, what would I do with 100K? If I had 100K capital right now, liquid, which I don't, if I had 100K liquid, I would not put it in anything. I'd put it in a money market fund. Or leave it in Robinhood and get 4.5%, because I am really scared to put any money to serious work on any of these names in the market. Like, put in the chat, where would you actually put 100K? And who realistically would deploy $100,000 versus hold on to it? Because I don't think a lot of people, especially if you had a good year, and Bart, you seem like you've had a great year with Palantir, so congrats to that. I don't think realistically you want to mess up the year you've had with Palantir. 100K profit, you probably don't want to lose that or be stuck bag holding anything, right? I feel like holding on to it is not the worst idea. I feel like, or if you do put it into something, I wouldn't put it into one company. I would pick 5 companies and put 20K into 5 companies, just so I have a little bit more diversity to consolidate going into 2025. And it's not like I'm a fan of diversification over solidification, but I have no idea what's going to happen in the next 5 months. And I think we've got to be a little humble to say, hey, maybe it's not going to be amazing, right? And just be a little bit more protective. So I would hold on to it. I wouldn't do anything, but I would collect 4% interest if you can get it somewhere and just hold on from there. Some of you guys are saying Nike, AMD. I don't know about AMD, bro. I mean, again, if there's a fundamental thesis on AMD, yes, which I think there is, but you have to really know it to do that. I wouldn't put it at Tesla at 470. I would sell puts. Oh, that's the other thing I would do. I would sell puts, right? So I would sell puts at 400 or 380 on Tesla. So that's another thing I would do with it, but that's if you're in the options market and you want to go down the rat. But if you just want to buy and hold, I just wouldn't put the 100K into anything. I would hold on to it. I would either sell very conservative puts on a name you like, or I would hold on to it. I would not be buying equities right now. If this was August, I would say equities are great to buy. If this was even January, but if this would be any time other than the last 2 weeks of the year, I would feel more comfortable buying. It's just really scary right now, putting your money into the markets. Dude, this is real money. And again, we were talking about the year 2000. Stocks can literally fall in a day. We all went through August 5th where we saw Palantir go from 29 to 20 in seconds, right? Like this stuff happens. It's not like just because it hasn't happened for months that it won't happen again, or years that it won't happen again. I mean, we've seen it happen. We've seen MicroStrategy go from 540 to 370. It can definitely happen. And you've got to be able to weather that storm, and you want to be in an attractive entry price to the point where you're not the one at the top of MicroStrategy. You're the one getting in at 250 if MicroStrategy gets back there, right? And I think that just requires more macro data to figure out what's happening right now. I would not go all in Celsius. By the way, Jason sold Celsius yesterday on the market close. Jason was a big Celsius guy. He got out of Celsius as well. So he is not in Celsius anymore. Nvidia's at 135. Nvidia is at 135 right now. Amit will be averaging it on Tesla at 1,000. Oh boy. Shopify. Okay, I like Shopify, but I wouldn't buy their stock right now, dude. I would sell puts on this. A lot of these names, dude, Shopify is kind of expensive, dude. It's trading at an 18 times price to sales. They've had a great year, incredible year. But again, if you're buying it when it's up basically 100%, like if you're buying a stock, you expect it to keep going up. Unless you're buying it, you know, and 10 years later, you're going to hopefully wake up and Shopify probably isn't going to be much higher, which is fine. But most people want to get a good price and they want to slowly buy into a name and they want to not really get in after it's already up a lot. So either 2025 is going to be a year where people are forced to buy at these high valuations, or 2025 is going to be a year where people get an opportunity to buy back in at least 15 to 20% lower. JPOW is going to help us determine what happens today. By the way, Nvidia 136 up 4.2%, but I think no one knows. And that's the scariness, but also the excitement of the markets. Where's SoFi? Are we still at 17 on SoFi? Yeah, back to 17. Look at SoFi, dude. SoFi's being a champ. SoFi is being a champ. Uber printed this morning. Yeah, Uber's up. Shout out to Gene. I know Gene's in these Uber calls. Uber right here. Look at that. Uber's up 4%. Nice, nice bottom feeding on Uber, Gene. Not bad at all. That one is doing good. Yeah, SoFi's doing its thing. SoFi 17. It looks like it's trying to normalize in this range as well. Is Tesla green? Did Tesla just go green? Oh my, it's like 1% away, 0.7% away from going green. If we go green before JPOW, that is going to be exciting. But it's also going to be a little scary. Like, why are we going green before JPOW? The indices are up. Okay, maybe the indices think JPOW is going to be dovish. Yeah, look at the S&P. That's up 30 bips. The Qs are up 10 bips. And IWM, which is, you know, you would think would be down on a day where JPOW is going to be hawkish, that's up. Guys, I really think there's an argument where we pump because the market's priced in the hawkishness and they don't care. Again, dude, if people are buying the dip on Palantir at 68.07, if people are taking Tesla to basically 500 in a week, this market is ready to go higher. This market has money in. Is it a little frothy? Yes. But it also means that that froth does not have to leave in the last 2 weeks of the year, which historically it tends to leave January, February, not December 18th to December 31st. Which means we might end up having a good rest of the year if the market is pricing in a dovish or hawkish JPOW and just moving on from there. BW, think of the $5 super chat. What was the max volume on Palantir when it was pumping? Does anyone know? I think it was like 350 million shares back in October, if I'm not wrong. I could be wrong on that, but I think that's the max volume, 350 million shares. Might be even a little bit more than that, but I think it was up there. RC, thank you for the $10 super chat. If SoFi hits 1776, can we have a symbolic salute? Yes, we can. We can definitely do a symbolic salute at 1776. Chris CRM says the biggest lesson I've learned with trading and investing is sometimes doing nothing with your money is actually the best thing you can do. That said, most great companies are at all-time high 60-80% of the time. Yeah, you know, you're gonna have to pay a premium for good companies. There's no way you're gonna get out of that. But sometimes just sitting and waiting. And again, I'm not a sitting and waiting type of guy. Like when I get money, I deploy it. The only thing is everything's trading so expensive. That's one of the reasons I like Grab right here is because although Grab's a bit expensive, first of all, $6 billion of the company's cash. So I think that is a nice cushion to the 60 cents of every share you're buying is basically cash. But second of all, it's in a place that's different than the United States, which is less expensive, AKA Southeast Asia. So in the United States, to buy equities right here, if you're not a fund manager that has to justify your performance towards the end of the year so that you don't get fired, if you did the work of just buying when no one wanted to buy August 5th, in January, April, when the Israel-Iran stuff happened, S&P fell to 493. You kind of did your job this year. Like you did your job. You bought the dip, and now if you put a substantial amount in the market, which based on what I asked you guys yesterday on how much you guys are up, and I was hearing 400, 500%, you're good, right? Like there's not a need in the last 2 weeks to get even more of the market if you kind of done your thing, which is why I think right now calls for time to just chilling out. That's not okay. I mean, that's okay, right? To chill out, especially if you've been in. And if you haven't been in the markets, again, I think it's okay to wait. I don't think you have to chase. I don't think you have to go crazy. Obviously, buying tech is one of those things that's going to do well over the next 10 years, but it doesn't have to be so aggressive to get in, especially if you're brand new to the markets, because we're up a ton. We are up a ton, and it is okay to just have some money on the sidelines here. Ironically, though, as I'm saying, it's okay to not be greedy. If we look at the fear and greed index, we got to greed like 2 days ago. And now, based on yesterday's red day, we are neutral. This is why the markets are going to keep going up, bro. This is why. Because freaking, like every time we get a 0.2% collapse, we go back to neutral and everyone's like, oh yeah, it's time to buy equities. Everything's down. So, I think it's okay to stay in cash, but I definitely don't think we need to get some massive correction. It's just you want to hold on, wait for good opportunities, and then decide when to put money into the markets. Tess says she's up 1,500% this year. That's incredible. That's wild, bro. I mean, shout out to you, Tess. I'm sure you're not alone, too. There are other people that are up a lot this year because they just got in on good plays, maybe levered up a little bit. Tess, did you use options at all for that 1,500%? Or is that just like equities? Because if it's just equities, that's wild, bro. That's freaking incredible. Andy, thank you for the $10 super chat, putting dovish vibes out there. Thank you for the $10 and for the dovish vibes. See, I can't even say the word vibes. That's why I can't say Volkswagen. Thank you for the dovish vibes. Appreciate it. And hopefully JPowell gives us some dovishness. August 5th was deployment day. I went all in with what I could afford. Yeah, dude. Whatever cash I had, bro. Whatever cash I had, I put it in. Never options, just leverage. Never leverage, just profit on equities. Wow. 1,500% on zero leverage is wild, bro. That's a hell of a year. Tess, when are you starting the fund, bro? It's time for us to invest in something. That's crazy. I don't think I know about anyone who's up 1,500% just on equities. I know a bunch of people that are up a lot because they used leverage. But just stock is kind of wild. Doug said, just exited my Qubit calls for 500%. Doug, I didn't even know you were in Qubit. Doug, you're such a degen, bro. Doug is such a degen. He's all safe with his money, and then he has this, and then he just gets degen on some of these Qubit calls. Goodness gracious, bro. Remember my emergency savings going into Hood? That was hilarious. I think it was like August 7th, and I was on the stream on the market close. I was like, guys, who has an emergency savings? And Bay Ray was like, well, I put all my savings into Hood because it was an emergency when it went to $14. That was hilarious. Look, I still don't have an emergency savings, but after I take some profits in January, I will set up an emergency savings. Now, granted, to be honest, I think my emergency savings is going to be my SEP IRA, my solo 401k, because I was talking with my accountant the other day, and I can contribute around 40 grand. The max amount is like 67,000, but I don't make enough to contribute that much. So 40K I can put into that thing. It's going to be on Schwab, and Schwab's interface is so disgusting that I think I'm just going to put it into some indexes, and that'll be my safe investing. Dow Jones, Berkshire, freaking S&P, QQQ. That way on my Robinhood, I don't have to worry about like having the long-term investing, that Schwab account, because that can go for the next 30 years. I can put in at least 40K for the next 30 years into that account. And that can just grow with the markets. So I think that'll be my emergency fund, essentially. Even though that's not really emergency fund, but that'll be like my savings fund, I guess. But I probably should also set up like a 20 grand regular emergency fund. My emergency fund is all in QQQ from 5 years ago. Worth it. Yeah, that's the hard part. Dude, when you become an investor and you have money on the sidelines, you just start thinking, damn it, like I could do something with this money, right? And it's kind of hard to just keep money on the sidelines. It is a disciplined thing to do, though, especially if you have a family and stuff. Like you never know what happens. You need that money immediately. You need access to liquidity. But sometimes it's tough because you're like, you see all the other things you could do with that money. I still have a Roth. Yeah, I have a Roth. Dude, my Roth, again, I told this story, but I'll tell it again for those that I mean, we'll do the math again. I had 200 call options of Robinhood in my Roth IRA that I sold for a $5,000 profit. If I had left them all the way till today, which I'm not that upset because I wouldn't have done it. I wouldn't have held on to them this long. But I would have had, I don't even want to do the math, bro. It makes me sad. 300,000 in my Roth IRA. 300,000 in my Roth IRA. 300,000 divided by the max contribution of 7,000 per year. That is 43 years of contributing to my Roth IRA. Like, this has been a good year and I'm very grateful for it. But that shit, if I had just like not messed with that, oh my goodness, bro. Like, that hurts. Like, that one hurts. That one's not fun. Now, granted, again, I probably would have sold when I was up like 30 or 40K, because I would have been like, dude, 30 or 40K off of a call option in my Roth IRA. Like, I should take, I'm pretty sure I would have sold. I would not have held on. But my main position, I've never sold. My main position on my main options, even on August 5th, I doubled down because I was like, nope, I have a number in my head. I want to get to that number. I think it's going to happen. The Roth, I didn't have a plan. You know the takeaway from this? Have a freaking plan, because I did not have a plan for the Roth IRA. That's why I sold for $5,000 when Robinhood was 13. Like, it was the stupidest thing ever. Because if you believe in Robinhood, and although my conviction got deeper as the year went on, but still, if I was bullish enough to basically YOLO my Roth into Robinhood options, I should be bullish enough to also realize, hey, there's a story here, and you've got 10 months until the story plays out. Like, give it a little bit of time, especially after their monster earnings that they had in Q4. So that was just stupidity in terms of not having an exit plan. That was so dumb. I remember, again, the story was that NVIDIA was tanking the day before earnings, or the day of earnings. It was like $600, so $60 post-split. And it went from 80 to 60. And I was like, oh, I need to make profits. I need to sell. And then NVIDIA crushes earnings. NVIDIA opens up at $995 the next day, which is basically $950. Or not 950, so basically 95 in post-split. And then Robinhood's up, market's up, everything's up. And I'm looking at myself like, why did I sell those options? In my retirement account, why did I do that? And again, hindsight is 2020, but still, you got to have a plan sometimes with these. And I think this is so now, you're taking those experiences and take it to Grab. What is my plan with Grab? Right? You got to have a real plan here. You have to have a real understanding of what you're thinking, a real timeline, so that if Grab goes to $7 and I'm up like 20 grand, I'm not like, oh, I'm going to sell it. It's like, no, I have a price target in mind. I have a plan. I have an understanding of it. And we're going to try to see if that can kind of go all the way. S&P is green. QQQ is green. IWM is green. A lot of stuff is green before we get into JPOW. Aren't you up more on your current HOOD options? Yes, I'm up a decent amount on those current HOOD options. But I have to pay taxes on those options. The Roth IRA, that would have been $300K of zero taxes. Like that's... You can do options on Roth. Yeah, you can do calls. You can't do spreads. Robinhood has to change that, dude. I don't know why you can't do spreads, but you can do like leaps. And that's also why they would have outperformed, because naked leaps, your upside is not limited with the sold call and the spread. But yeah, that was annoying. But again, super grateful for this year. It's just one of those things. It's those lessons you learn. That's a $300,000 mistake, bro. That's a big mistake. It's not a fun mistake. But then you also have to be honest. Like, would you have actually waited till 300? Probably not. I mean, dude, if I saw six figures, if I saw 100, I would have sold. I would have taken my, so it's also one of those things where you have to be real with yourself on how long you actually would have kept it. It isn't a Robinhood thing. No spreads in IRAs. That's a law. That's a stupid law, bro. Why can't you do spreads in your Roth? That's so dumb, bro. Like, it's at the end of the day, it's just a long call and a short call sold on top of each other. There has to be some weird reason why you can't do that in an IRA. Amit, can you run a poll on how many portfolios are up triple digits in 2024? That's a good idea. Let's do that, because you guys said it yesterday, but let's do a actual poll. Okay, 70-30, 1,300 votes on the JPOW, 70-30 pump. So most of you guys are bullish. Okay, so let's do this. Portfolio percentage returns 2024. I'm going to do, let's do 30% matching the S&P. Let's do 100% outperforming. Let's do I guess higher than 100% as one option. And then the other option, we should do less than 30%. So either performing with the S&P, underperforming the S&P 100%, or multi-triple digits where you're higher than 100%. Let's see. Samir says, Amit, talking about spreads, when do you close your spread? Close to the expiry date or when the stock has moved above both your strikes? Okay, so it depends on your time frame, right? So Robinhood, it was a $22, $25 spread. Robinhood's at 40. So there's not a lot of pressure for me to close the spread because we're so deep in the money that now theta decay is taking over. And every single day, that's why I'm waiting until January 1st, the spread is maturing in terms of its full maximum amount. So I'm closing the Robinhood spreads in January, A, because to save on taxes, so I don't have to sell right now. B, because, we're not at 27, 28. I'm not afraid of Robinhood going back to 25. If Robinhood was like 26, 27, I would close my spreads today because the chances of going below the short side of my spread would be higher because you're only a couple of dollars above it. And anything could happen in January and then boom, you could lose the full value of your spread. Or if Robinhood was 23, 24, and I was in the middle of the spread. But if you're super deep in the money, you have some time to wait. I also brought $37, $40 spreads on Robinhood when it tanked on freaking what was it? The earnings. And those are in the money right now. Let me show you guys those. Those are up right now as well. They were up like 120% yesterday. But I bought $150, $37, $40 spreads for 2027. So I have 2 years on this. And I don't have to kind of worry about closing. And Robinhood above 40 means that they're in the money. So the answer to your question is if you buy an out of the money spread and there's a dramatic move in the stock. So for example, let's look at SoFi. You will get some asymmetric returns. So for example, my SoFi spread was 15.20 expiring in a year. And the stock, I bought it when SoFi was $7. That's why I'm up 405% right now, right? I could take profits right here because I'm up 405%, take the 14 grand, call it a day, and boom, you're good to go because you got a dramatic move in a short period of time with a long expiration on the spread. But I think SoFi is going to 20. So if SoFi goes to 20, let's say in 5 months, then I just have to wait for another couple months for SoFi to stay above 20, and then I'm good. Now, let's say SoFi is $19 in the next 8 months, and it's barely getting to that 20. This spread will be worth more, but it's not going to be worth the full amount until it gets above 20. So that's when you have to say, hey, do you want a parabolic move, take your profits and run? Or do you want the full width of the spread by waiting? And by waiting, that means you have to let time decay happen, theta decay happen. And that takes time for the spread to play out. Now, let me show you guys something on this. Had I just bought the $15 call itself on SoFi, not the spread, I would be up 665%. As you guys can see right there, I would be up $51,000. Had I just bought the $15 spread, $15 call, not the spread, I would have been up 665%. Now on the spread, I'm up 400%. I'm not complaining, but why did I do the spread over the long call? Because the long call costs more money than the spread. I would have had to pay $77 per contract versus $35 per contract because the premium I got from the short call offset the premium I was paying for the long call. And therefore the spread, although it has a max amount that you can get paid on, it will appreciate in a different way because you have to get above the short side of the spread in terms of the strike price in order for the actual value to occur, and you need theta to decay for the spread to mature over time. So I like the move that I made, and there's a reason I like the spreads because it protects against the volatility. But if you buy the naked calls and there's a dramatic move, you can get a much better appreciation. But then again, who thought SoFi was going to go from 7 to 15? I thought SoFi would get to 20 eventually. Right now, it looks like it's going to get there, pretty soon, or at least early next year. And so that's why, some of the spreads can benefit off that if you get in right at the bottom and then there's a big move to the upside. Okay, what is the results in the poll? The poll says 21% of you guys have matched the S&P at 30%. 18% of you are about 100%. 53% of you guys have achieved higher than 100% on your portfolio this year, and 7% are less than 30%. Dude, that's not bad. That is not bad. That's a lot of people that have fundamentally outperformed the markets, dude. A lot of people that have outperformed the markets. Like that's pretty amazing, dude. Like, you don't get that. Retail doesn't get to do multi-100% returns every year. So 2024 is just an incredible year for that happening for you guys. And it's been a good year. It's been a good year for a lot of people. And we just need J-Powell to not mess it up. We just need J-Powell to not mess it up. Chris says, did someone teach you about calls before you bought the 200 of Robinhood? What made you take that risk? Thinking of buying PayPal calls for next year because of the growth and explosion to the upside. Okay, so again, you only buy calls when a stock is in the gutter, right? Robinhood at $6, at the time I bought it, I think it was $10. It was in the gutter. Like 80% of the market cap was cash, right? Or like 65% of the market cap was cash. That's when you buy calls. Now, your Roth IRA, you're supposed to be responsible with it. There was 10 grand in my Roth IRA. I was like, you know what? It's not that big of a deal, right? Like it's 10 grand. It's not like it was 100 grand or something. I'm not 50 managing a lot of money. So I was like, okay, 10 grand. If I can turn this into 20 grand with a little bit of a shortcut using these Robinhood options, that's better than having to wait to deposit next year my 7 grand. So I took the risk because I thought Robinhood was undervalued. I thought it was a nice move to the upside. The $25 leap was the delta I was looking at was every dollar Robinhood moves up, the leap would move up by 30%. And I remember that math I was doing and I was like, okay, that's reasonable. So if Robinhood gets to like $15, then this gets, so that's how I came to the conclusion. But the core point was that Robinhood was deeply oversold, in my opinion, undervalued. I don't know if PayPal is in that same position right now. At $49, PayPal was in that position. At $90, I don't know. Again, with options, you need a big move. You need a really big move. Like Archer at $3, that was the time to buy calls because now Archer's at 10. Archer at $10, I don't know if this is the time to buy calls on Archer after it's up 300%. And so I do think you got to kind of really see a stock that's depressed before you decide to jump in on the calls. Otherwise, you might just not get a big enough move to justify the momentum on the options. Is Robinhood tanking? Are we tanking 39.88? Wow, the whole market's green and Robinhood. That's a weird one, right, guys? S&P, QQQ, Bitcoin, everything's green. Robinhood's red. That's really weird, dude. I don't know. I don't know why. I would imagine maybe an insider selling, but insiders haven't sold for like a week. I mean, there was one insider sale, but is one of the co-founders who's like starting a startup or something. So he took like 200,000 shares off the table. He still owns 50 million shares. So it's not really a big sell. This one, I don't know. I don't know why we're down 4%. Could be just coiling up. Could be people taking profits. Again, we were up a lot over the past couple weeks, but not sure exactly. Hood's tracking Bitcoin. Yeah, but Bitcoin's green. Bitcoin, I mean, I know Bitcoin's down from 108,000. So maybe Hood's catching up to the downside because it's at 104, but Bitcoin is still green on the day. All right. I think that's pretty much it, guys. I think that... Oh, let me show you guys the clip from Martin Shkreli. Let me show you that. We'll end it on that. It's 11 a.m. Let's end it on this Martin Shkreli thing. So again, I got to join the spaces last night. And it was fun. It was really fun because I started a fight and I didn't mean to start a fight. But I started a fight. Does he have the recording? Does he have the recording? Does it work? Oh, no, I don't think we can see the recording. Oh, sorry, guys. I don't think that's weird. Doesn't it record after? Does he not let it record after? This was the spaces. Yeah, I don't think we have the recording. Do we? Was this last night? No, this was this morning. Yeah, guys, sorry. We don't have the recording. Sorry. I guess he doesn't record the spaces. That kind of makes sense because Shkreli has been in a lot of legal issues for things he said publicly. So he probably doesn't want there to be a track record. But yeah, I wish we get the audio. But again, it was funny because I asked him about MicroStrategy. He said it was a piece of shit. Then you had a MicroStrategy Maxi come on. He started fighting with him, and I was just in the middle of them fighting back and forth. So I wish I could play it, but unfortunately, we can't play it. Okay, last headline for right now. Gene says U.S. Supreme Court will hear arguments over the TikTok divestment law. Wow. Is Meta down on that news? Is Meta down? Meta it's green, but you got a red candle right there. Interesting. So the Supreme Court is actually going to listen to Trump's lawyers about not letting TikTok get banned. If they keep TikTok, that's a big win for Trump because he wants to keep it. If they get rid of it, that's a huge win for Meta and Google. That's 170 million eyeballs that are going to go to YouTube and Instagram. And you know why? In India, I tried to watch TikTok and it wasn't working. And I was like, is my Wi-Fi bad? And then, one of my uncle, I think my uncle or my aunt, she was like, no, TikTok banned here. I was like, oh shit. And then what I went to Instagram. It was really that simple. It wasn't that. So that's what is going to happen in America. And Meta is going to get a ton of new users if that happens. So that's going to be a big thing for Meta. So I guess the Supreme Court is now taking a look at it and we're going to see what's going to happen. All right. Adam says, I think that's it. 30 minutes later, is Tesla actually going to hit 488? No, we got to end the stream. We've been live for 2.5 hours. I'll be back pretty soon. 2:30, 2:25. I'll be live. Jay Powell. We'll see what happens with the cut. Big day. All of us who are in the stream actually care about Jerome Powell. We probably shouldn't. We should be like normal people that care about, basic things happening in the world, not Jerome Powell and every syllable that he utters. But then again, basic people are not up 100% year to date on their portfolios. And that's why all of us are here. That's why we watch Jay Powell. And that's why we figure out what to buy and sell based on what's going on with Jay Powell. So that's why we're here today. Let's do word of the day, and then we are gone for the day. Word of the day is epicure.
Epicure.
A person with refined taste, especially for food and wine. Danny's reputation as an epicure made her the go-to advisor selecting wines at dinner. The chef tailored the tasting menu to suit the preferences of the visiting epicure. Okay, so I am definitely not an epicure because when I was at dinner with Iliano, Palantir employee at DC, he was like, all right, guys, what do you want to drink? And I was like, can we get some white wine? And he was like, dude, what is wrong with you? He was like, get out of here. And then the waitress came and I was like, do you guys have Shirley Temples? And he was just so embarrassed. He's like, I'm sorry for my friend. I'm sorry for my friend. I'm sorry. And then I ended up getting a gin and tonic, bro. The most basic shit ever. So yeah, I'm definitely not an epicure. But medium well, I will stand on that, is better than medium rare. All right, that's it for me. Thank you, everybody. I'll be back at 2:25 p.m. Eastern Standard Time, and we will see what Jay Powell has to say. Bye, everyone. Have a good one.